Hey, good morning, Daniel. How are you? Ooh, I'm a minute early today. There goes my OCD, right? Dag nabbit. How's everyone doing today? Good morning, Miss Sophia. Guys, nice to see you. Nice to have you. Joel, Gary, I know is wandering around. Ron's, nice to have you in here. Hey, Marco, nice to see you. I want to call you Termy because I see the name, but I got you. Hey, good morning, Miss Debbie. It's nice to see you. I love that there are men and women in this room. No, it's no worries. I know now, so I'm good. Man, trading's for everybody, guys. I don't care who you are, where you're from. We're just working, right? We're just working on patterns, being better. We're doing it together, making sure that everybody's good and comfortable. For those of you that are new, I'm starting to see a lot of new names in this room, which I enjoy a lot. My name's Mark Novak. I do run the education room. I'm here Monday through Friday from 9 a.m. until noon. And my sole purpose in life is to give you feedback on everything that you do. Um, we're going to talk a lot about rules. We're going to talk about patterns that give you a statistical advantage. We're going to keep it simple. We're going to keep it focused. And guys, we're kind of going to put those blinders on and we're going to be very narrowly focused, laser focused, if you will, on the absolute best of the best. Always giving yourself the best chance of success. I'm a big fan of routines. I'm a big fan of checklists. In a previous life, that was my thing. I was the systems and routines guy. And part of my routine every morning is going to forexfactory.com and looking for news. It is 9:01 a.m. on Wednesday, June 28th. Guys, at 8:30 a.m., there was a little bit of news, not much. It was low impact. We didn't expect a big reaction from the market. But at 9:30 a.m., Fed Chair Powell's going to speak, guys. You can see that great big red box next to it. That's scary for a lot of people. There's a lot of people sitting on their hands waiting to hear what he says, and then waiting to react to what he says. So these high impact news can create a scenario in the market where it moves fast, where it changes direction, where it spikes, bumps, jumps. Your awareness coming through, recognizing that that is a potential problem, that can take away any advantage that you have. Guys, that awareness is going to allow you to make a decision on whether or not you actually want to trade into news. I myself do not. I'd rather go sit on my hands, toast a bagel, grab a new cup of coffee, something like that. If you're one of my crude oil traders, 10:30 a.m., crude oil inventories will be coming out. The market can react to that violently. So if you are a crude trader, and guys, usually in the room a couple people say it, but set a note, write a note, set a timer on Siri, make sure that you know what's going on. But I gave you the link. It doesn't have to be forexfactory.com. It can be any calendar that you want. This one's done well for me for the last couple of years, so I like to share it. Everything that I talk about comes from the education page, guys. There is the trading guide, the software guide, and then, of course, to join Discord, which you've already done. The trading guide is nothing more than the tutorial, guys. This is where everything I talk about comes from. I try not to deviate too far from what Nexgen provides you because Nexgen provides you everything that you need to be successful. And your success starts with laying a foundation, creating the solid platform from which to build. So in this room for the first hour, and there's a lot of you that are a little more advanced that don't even need this first hour anymore, which is cool. I appreciate that you're here. But this first hour is for you newer people, for you guys that are on demo, for you guys that are in your first 30 days, 60 days that are working on consistency. And we're going to talk about a high probability trade. We're going to talk about this high probability trend trade, a trade where every indicator on every chart agrees with the rules for the trade. And typically, this is when the triggers are going to be their strongest. There's going to be absolutely nothing in the way between you and your targets. No termination conditions, guys. This is the best of the best. This is the trade that typically wins 70 to 80% of the time. This is the trade that even in the user guide it says, focus on this trade for your first 30 days. Focus on having these advantages. Focus on learning the entry. for a high probability trend trade, because what it's doing is it's not just teaching you to take a trade. It's not teaching you to give yourself a statistical advantage singularly. What it's really doing is it's teaching you to read your charts. And chart reading is going to be the most important thing that you can do, because chart reading is 90% of what we do during the day. 10% is waiting for advantages to be present. 10% is waiting for that perfect scenario, right? Where you just say to yourself, I have to be in a trade. I have so many advantages, it would be silly not to. That's the trade that we're going to talk about today. This trade is going to allow you to learn to read your indicators. And when you read your indicators, when you read your charts, you're going to understand some very key concepts. Hey, good morning, Jose. You're going to understand where the market is likely to continue. This is going to be your entry point for that highest probability trend trade, guys. That area where the trend is likely to continue. You're going to understand where the market is likely to go. You're going to use Fibonacci. You're going to use momentum. And you're going to be able to make targets. You're going to be able to manage these trades based on where the market is likely to go. And then also you're going to understand where the market is likely to stop. And this becomes a very pivotal part of the education, because areas where the market is likely to stop, these are what we call termination conditions. And this can stop the trend dead in its tracks. These areas where the market is likely to stop will keep you from trading into spots that are trend enders. But more importantly, the areas where the market is likely to stop, if they create a reversal in the market, that's going to set you up for the highest probability trend trade that you can take. That trade that typically wins 70 to 80% of the time. And that's really what we're going to focus on this morning, guys, is we're going to focus on one trade, high probability trend trade. This one trade only has 3 rules, and each rule provides you an advantage. These advantages are universal. We're using them in relationship to this trade right now, but you are always, because of your study on the high probability trend trade, going to be able to recognize momentum, and you'll be able to recognize it in an instant. You're going to understand how to identify a clear path. This clear path will lend itself to whatever trades you're taking, letting you know that there's nothing between you and your potential targets. And then this trade also provides you the advantage of knowing where the market is likely to continue, having that entry area. And you'll find that every time you take a trade, you want to get in where the market is likely to continue. It's going to allow you to reduce risk. It's going to allow you to maximize profit potential. So we're going to focus on only 3 rules. And guys, we're going to keep it simple. These 3 rules are going to happen on 2 charts. You will see other people in the room trading multiple charts. You'll see people with 3 charts or 4 charts. You'll get there one day, I promise. You'll work your way outside of a high probability trend trade one day. But if you lay this solid foundation, if you teach yourself to read your charts, to understand these concepts, it'll be easier to add to your plan if you stay focused in the beginning, guys. We're going to use a large chart and a small chart. 2 charts. Large chart is the overall opinion of the market. It's what everybody's doing. It's going to define direction, or another word for direction is the trend. What direction is the market trending? It's going to define, through rule number 1, momentum, letting you know that you have advantageous momentum, looking for a trade in a market that's pushing in the direction and is likely to continue pushing in the direction. And then it's also going to determine whether or not you have a clear path, which means that your large chart defines areas. And you're going to allow this large chart to give you 2/3 of the equation, 2/3 of the advantages that are needed for a trade. And when you have them on that large chart, this is when you turn your attention to a smaller, faster chart. And you're going to refine that broad stroke of a brush that the large chart is. And this is going to allow you to pinpoint with amazing accuracy where the market is likely to continue, part of that chart reading. And that's your rule number 3, is your entry at that point where the market is likely to continue. And by utilizing this rule, you're going to be able to reduce your risk. You're going to be able to maximize your profit potential. So we're going to go through and we're going to talk about each of these rules. Throughout the course of the day, especially my new users, you're going to find that I share a lot of pictures with you. My goal is that you can listen, and that you can take these pictures and you can kind of visually go with what the lessons are. Take these pictures, steal these pictures, guys. Get in the habit of letting pictures kind of lead the way, because there is a path to becoming a confident trader ASAP. And it begins with pictures, guys. It begins with taking a picture of everything that you see. Every time you take a trade, you take a picture. And pictures are great. But if you're not doing anything with the pictures, if you're taking them and let them get dusty in the back corner, guys, they're not going to serve you. So you're going to need to take a picture and then share it in class. And you can use this capture software. It was provided to you when you downloaded the software. For Nexgen, it was a part of the package. If you just go to your search bar and type in TechSmith, or even just tech will probably get you to where you want to be. It's going to bring up this capture software, this yellow icon. And guys, this is how you and I are going to have a conversation each and every day. And I'm going to go back to a live chart, and I'm going to show you exactly how you're going to be able to take these pictures, guys. Here's our two chart process, our large chart and our small chart. We need the information on both in order for me to give you the absolute best feedback. So you're going to click that capture button. If you hover over just one of the charts, you only get one chart's worth of information. But if you left click in the upper left hand corner and drag it all the way down to the right, release the mouse, it's going to give you the option to take a picture. Let me pull this over. You can take a picture, you can take a video, you can start over, whatever you need to do. But I'm going to take a picture. And once I click that camera icon, it's going to give me my capture image preview. And this capture image preview is going to be our pathway to having a conversation. You asking questions, me giving feedback. And it's imperative that you tell me what you're doing. You can use shape tools. Maybe you want to talk about what you see and where you see it. Maybe you took an entry, or maybe you recognize one of those areas where the market is likely to stop. You can use an arrow. But the most important tool that you can use is this call out function. Click on call out, left click from the top down to the right, create a box to type in. But this is where you're going to write your rules. And guys, I put a picture of the annotated chart in there. You're going to tell me why you did what you did. Why did you enter? What were your advantages? You're going to tell me how you felt. A lot of times people will tell me, hey, I'm nervous. Or I was a little jumpy on this one. I was breaking a rule. I knew that I was a little nervous. And you might even tell me, I broke rule 2 due to the advantages I saw. And then let me know what those advantages are, guys. I'm going to help keep you accountable to a plan, to a set of rules that you provide me on the chart. And I'm going to help you see what you see. I'm going to let you see it better. I'm going to help you avoid mistakes. I'm going to help you embrace advantages. But this conversation and these pictures, guys, this is the difference between sitting on the sidelines wishing you knew and really getting into it and creating this awareness and this understanding of the rules, of the advantages. Once you have all of this written on the chart, you have it put together, just click that copy button. It's going to put that picture on your clipboard. Control V in the room is going to paste it in. And then be patient. The first hour we talk about rules. The second hour we begin to look at your charts. And the other thing that you can do with this is you're going to upload it to Screencast. By clicking upload, it's going to take that picture and put it in the cloud. And it's going to provide you a Screencast link. If you copy that link, it's going to take you to the second half of the path to being a confident trader ASAP. You're going to track your real-time performance in a spreadsheet. Again, Nexgen provides you the spreadsheet. We're going to give you everything that you need to be successful. And there's 2 pages on the spreadsheet, and I'm going to show them to you. I've got pictures of both. The first page is your trade tracking sheet. Every time you take a trade, you're going to post it into this. Every time you take a trade, you're going to post it on this front page. And when you post it on this front page, you're going to be able to talk about what type of trade it was, when you took it, how did you feel, what were the conditions getting you in, were you following rules, were you breaking rules, and the most important thing is put some notes on it. If it was the perfect trade, say that it was the perfect trade. Remind yourself that that's what you want. If you broke the rules, write that you broke the rules. Guys, everybody's going to break the rules in the beginning. It's okay. I want to see when you break those rules so we can talk about how not to break them next time. So track everything that you do. You're going to recognize patterns in the market. More importantly, you're going to recognize patterns in yourself, the same patterns that I'm going to recognize when you present that in the room. And then the second page is your favorite looks page, guys. I have 4 columns over 60 trades each of rules-based entries. This is my personal trade setup look. This is what it's going to take to get me in the market. Whether it's a high probability trend trade or a medium probability trend trade, whether it's a momentum trade or an HVA trade, create a diary of the absolute best of the best. Create a log where you can come through and click on it and remind yourself exactly what it's going to take to get you into the market when your rules are met. Guys, if you get in the habit of using this spreadsheet every day, post your pictures in class, use the spreadsheet, it's going to create advantages. And then take those pictures, study them the next day. Everything that you did yesterday, you should study today. What worked and what didn't work? What felt easy or kept you relaxed, and what felt forced? What made you nervous? A brief historical study each and every morning, guys, is going to prepare you for the day and accelerate the learning. Can't stress this enough. My most successful traders always go back and look at their journal. They always go back and say, this is what I did, this is what I didn't do. This one brought me success, this one did not. I'm going to repeat the path for success. Same thing with that second page. Make sure that you're using it. Our first hour, we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. We're going to talk about those 3 rules. We're going to look at the 3 rules. I'm going to show you pictures. I'm going to give you definitions. We're even going to go to the live market and we're going to be able to identify them happening real time. When I do this, I want you to simulate. I want you to fire up that simulator. Don't wait until you think you have it down. Don't wait until you think you can do it perfectly. Don't wait until you think you have this solid understanding of the rules. Guys, get in there and mix things up on that simulator. Take the wrong trades, break the rules, make mistakes. It's simulator, it's monopoly money. But put those pictures in the room so that we can refine what you're doing to getting focused in on the absolute best of the best, because I want you practicing the correct rules, creating muscle memory for long-term success. If you practice the wrong trades, if you're just jumping in and out, trying to make that simulator money go way up, it may be a short-term victory, but it really is a long-term failure. We're going to simplify. 2 trades in your plan. What looks will you commit to? You have to learn the looks so that they're easy. Guys, that's what this page does for you. This is learning the looks so that they become easy. This is making sure that you understand what it looks like when your rules are met. And this says 2 trades. Our first hour, we're going to talk about a high probability trend trade. We're going to focus on a trade where each and every indicator agrees for the trade. Your chart reading that comes from that high probability trend trade will take you into a medium probability trade. And this medium probability trade is defined as when most of your indicators line up for a trade. However, small issue exists. I want you to embrace the fact that issue is singular. That's not an accident. One small issue may exist. It lowers it from high to medium, but it can still be an outstanding trade. And this will probably be the majority of your trades. Your ability to read your charts will identify that small issue. Your ability to read your charts will allow you to manage it assertively. Your ability to read your charts will have you recognizing your trouble spots so that you can take profits quickly and get to a 0 loss level. Guys, the high probability trend trade builds the foundation to do great things. The medium probability trend trade is going to be your first trade outside of that high probability. And I'm going to give you a plan and all the looks for it. After class, before the next day, download your replay data for that current day that you just finished trading. And go back and retrade the day, fixing the mistakes you made or taking the trades that you missed or skipped. The idea isn't to be simulator rich, guys. The idea is to see the potential of what it looks like when you follow your rules for a day. Because what you're going to find is on market replay, you can pause, you can verify before you enter a trade. And it's pretty amazing the potential that's present when you do that. Take pictures of everything you do, whether it's during the day or whether it's on market replay. Present them in class and repeat this process every day until you're always taking the correct trades. Because if you're taking the correct trades, you're recognizing the advantages. You're putting yourself in a position to win more than you lose. And guys, this high probability trend trade creates a plan that allows you to be successful while you expand your knowledge. When you are always taking the correct trades, when you've gotten your feedback, when you've filled up your spreadsheet, when you're comfortable with getting in the market at the best of the best spot, and then you become comfortable with managing those trades, that's when you switch to live money. That's when you go to one of those prop firms. Don't skip the steps, guys. Follow the path, get to where you want to be. This is a very proven method to create success. All you have to do is embrace it. So we're going to start. And we're going to look at 3 rules, guys. Large chart needs strong trigger lines. When the large chart has strong trigger lines, it gives me the advantage of momentum, the first part of the 3-part equation. So I'm going to come to the education page, and I'm going to click on the T3 trigger lines. And the first thing the trigger lines are going to do is they're just going to tell you which direction the market's moving. Pretty simple. If the background on your large chart is green, you're in an uptrend, and you should only be looking for rules to be met for high probability trend trades long. If the background on your large chart is red, you're in a downtrend, and you should only be looking for rules to be met for high probability trend trade short. Guys, give yourself the advantage of trading with the trend. And if I go to the live market, this is how easy it is. Guys, what direction is the trend? What do you guys think? My background is red on my large chart. I'm only looking for rules for high probability trend trade short. I'm not saying there's a line here, go long. I'm not saying there was a blue fib, go long. I'm saying as long as I'm in a downtrend, the only direction I'm going is short, guys. John Novak had a broker tell him once, hey, Mr. Novak, I can guarantee you $1 million in your account. All you have to do is follow my advice. And John Novak said, well, sure, what do I have to do? And that broker looked him dead in the eye and he said, Mr. Novak, I need you to fund an account with $3 million, and I want you to fight that trend every chance you get. You should be down to $1 million by the end of the year. Bump, guys. True story, silly story, but a true story. Rule number 1 gives us the advantage of momentum, guys. Rule number 1 gives you a market that's likely to continue in the direction of the trend. Strong triggers look exactly like this. Your small triggers, these solid lines, work with your large triggers, these dashed lines. And when the small triggers are crossed up and above the large triggers, which are also crossed up, the space in between lets me know that the odds are favorable for this market to continue in the direction of the trend. You're going to hear odds favorable momentum in classroom all day long. When you have odds favorable momentum, this is the most favorable look for buying a pullback at Fibonacci support, guys. When you have odds favorable momentum, you're going to be able to pinpoint where the market is likely to continue. This is where your advantage is the highest, and that market is likely to continue in the direction of the trend. Same thing going in downtrend. Smalls are below the large are wide, they're angled down in the direction of the trend, and the space between the two lets me know that the odds are favorable for the market to continue down. Guys, odds favorable momentum should be the first advantage that you give yourself on any trade that you take. Because if it's likely to continue, it creates an advantage. There's another one of those tails, one of those potential pullbacks. You're going to see these with odds favorable momentum, and you're going to be able to use this to help you study as you grow with the software. Guys, commit to momentum in everything you do as a brand new user. It will create a very solid advantage, and it'll eliminate a lot of the mistakes. When those small triggers work their way back into the large triggers, we call this a weakening of the large triggers. This is a time when anything can happen up or down. And you're going to hear me call these anything can happen triggers. I want you to embrace that, guys. Words have power, right? Anything can happen. It can go up, it can go down. I don't really know because anything can happen. Guys, rule number 1 is going to create a very clear advantage for you. And it's not going to happen every second of every day. Whoops. So this is your rule number 1 picture, guys. And I really would appreciate a why in the room if you're brand new, if you're learning the software. Are you comfortable with the idea that when the smalls and large separate, when there's space between the two, they're open like scissors, ready to cut? Guys, this is your best look, and look how the market continues in the direction of the trend. Here the market's coming down. There's those anything can happen triggers, and they happen right before a reversal. You've lost the advantage of momentum. It becomes a coin toss, guys. We're going to look for our opportunities with that momentum. When the triggers weaken, the market may reverse. We're just going to sit on our hands because we no longer have that momentum. And that's going to happen on and off throughout the day. Sometimes nothing's going to agree. Your smalls may be up and your large may be down, or your background is red and your triggers are green, and there's this little indecision. There's this transition period in the market. Rule number one keeps you from having to predict which way the market will go. Rule number one keeps you from getting caught in the middle of a fight between buyers and sellers as they work through. Guys, we have 6 minutes until Chairman Powell speaks, just if you're getting wrapped up. Rather than trying to continually predict, sit on your hands. Go get a cup of coffee. Wait for that odds favorable momentum to come back, guys. It's going to create huge advantages. It's going to pay dividends. And if you open up a large chart and all you do is look at triggers, you're going to have oops, I just redid the same template. And guys, you have this template. Sorry about that. I hit the wrong button. You have this template on your computer when you download software. You can go to 2 triggers only. And with 2 triggers only, you can start the process of studying. You can look at this odds favorable momentum and circle a tail. And I know that a couple people in the room took this one this morning. And you can find that odds favorable momentum and you can circle a tail. And you can scroll back and you can create this awareness when the advantages are present. Guys, is everybody good with this? It's fun to sit on the sidelines and be a wallflower, but if you participate, the odds of you getting this come a lot further. Here's that indecision, right? The larger up, the smaller down, the larger flat. There's just nothing going on. Waiting for that opportunity, guys. And then there's a huge move down that started with the momentum and one of those tails, one of those potential pullbacks. So get in the habit. You can scroll back 10 days and just circle these tails and give yourself the advantage of understanding when the market is likely to continue. Guys, this is the first advantage that you're going to give yourself. And once it's present, you're going to give yourself the advantage of a clear path. And you're going to do that by making sure that no termination conditions are present. What's a termination condition? It's just a spot that may reverse the market. And it's based on a comparison of the area and those T3 trigger lines, the same ones that give you the advantage of momentum. Jerry, 24 tick stop so that you can put it where the market shouldn't go typically works out well. Remember that a tick in the NASDAQ is $5. So each point is $20. So 24 ticks is only $120. It's the same idea monetarily as a 12 tick stop in crude. Hope that helps. But that gives you reaction time. Guys, the areas that may stop the market: red Fibonacci support, red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1 dots. It may be a magenta divergence high line or a cyan divergence low line. Guys, these are areas that might put an end to the trend. These are the areas that the market may react to. These are the areas that you're going to be aware of so that you can determine whether or not you have a clear path. And determining the clear path is actually a pretty simple process. You are going to take a 2-part comparison. 2 steps. Let me get to a picture here. So 2 things have to happen to understand if an area is likely to stop the market. The first thing is that price reaches the area. As price pulls down to Fibonacci support, those dynamic Renko bars, I'm going to take a picture of a picture for the sake of termination conditions. Those dynamic Renko bars reach Fibonacci support. All you have to do is ask yourself, where are the trigger lines? If the trigger lines remain above that area of support, this area of support is likely to stop the market. It's likely to create a reaction. It takes away your advantage of a clear path. Rule number 2 isn't met. That's your simple process. Price reaches, where are the trigger lines? Guys, it's easy to define when the market hits an area where it's likely to stop. Up here, you can see that price reached support, small and large remained above it. That's a termination condition as well, right in the moment. You're not taking any trades into that area. You're waiting for the area to break so that you have a clear path. An area is considered broken when both the small and the large triggers make it to the other side of the area. Support begins to act as resistance. Small and large through the area is broken, you have a clear path. Price reaches the area, no triggers break, no clear path. Guys, that's it. 2-part process. Pretty simple. And that's your foundation in the beginning, right? The foundation in the beginning is doing that simple price reaches, no triggers, no clear path. Rule number 2 is not met. Small and the large break through the area. Now the area is broken. Now the path is clear. And guys, the same way I put a note on the trend, how would it affect your trading if you only traded with the trend? Guys, how would it affect your trading if you always had a clear path, if there was nothing between you and your target? I can tell you it creates a huge advantage. There's no areas where the market is likely to bounce or react. Guys, there is that trade. We said that you're going to look beyond that high probability trend trade at some point in your life. And you're going to have an instance where an area has the potential to break. And it's what we call a 50-50 trade, guys. If your small triggers break through an area and your large triggers do not, and you have odds favorable momentum, such a key part, this Fibonacci support has the potential to break. Guys, this look will be your first medium probability trade. And your first medium probability trade is called a 50-50 trade. Has nothing to do with your chance of success. It means that your small triggers are through 50% of your trigger lines, and your large triggers are not, the other 50% of your trigger lines. You could call it a straddle trade, a one above, one below trade, whatever you want to call it. But 50-50 means that this Fibonacci support has not yet broken, and the path isn't clear. Once both triggers get beyond, then it's broken, support begins to act as resistance. Guys, when you have a 50-50 trade, when that path isn't clear, you forfeit the advantage of a clear path. And when you forfeit the advantage of a clear path, it's imperative that you don't sacrifice momentum and that you don't sacrifice an entry area. And these key elements, remember, a medium probability trade says that one small issue may exist. Your lack of a clear path is that small issue. Embrace momentum, embrace the entry area, give yourself the best chance for success. You're going to do this recipe all day long. Everything comes down, price bars reach, it's a termination condition. But then the smalls get through and the large start to break through. And we get one of those divergence lows, a pivot with a loss of momentum. Guys, this on its own, because of the overrun, not really a termination condition. We've gone too far beyond the fibs. The triggers have exceeded too far. When price comes up and comes back to that divergence low line, now we have what's called a pivot stop out of a prior divergence. You'll see price exceeded by a little bit. Large triggers stay above, small triggers stay above. Now I have a termination condition, and a pivot stop out of a prior divergence is a very powerful termination condition. And it becomes even more powerful when it coincides with Fibonacci resistance or support. Guys, when you get one of these divergence lines and price exceeds it and the triggers don't, and then it trends the other direction, it adds power to that Fibonacci that's acting as a termination as well. Is everybody comfortable with termination conditions? Price reaches, no triggers, no long trades, right? Price pulls back to support, none of the triggers are broken through, no short trades. 90% of your day is reading your charts and waiting for advantages. Ultimately, it goes to resistance, the divergence high, resistance, none of the triggers break. Now I have a pivot stop out at a divergence high. It coincides with Fibonacci. Guys, this is your best of the best look to reverse the market. This is what we call a strong top, a termination condition that creates a full reversal is a strong top. It's a good top. It's the precursor for your highest probability trend trade. A termination condition, price reaches support, absolutely no trigger lines break through, that creates a full reversal. Large go from red to green. Smalls get above. That creates that clear path, that gives you rules 1 and 2. Guys, that circle's one of the pullbacks. This is your best of the best look. Your highest probability trend trade is the one that happens after a termination that creates a full reversal, after a good top or bottom. It's not imperative to take the trade because the advantages can still be present. Without that strong top or bottom, it just adds the likelihood of success. Sometimes the market turns. All the trigger lines break through, the path is clear, and the market pivots, goes from down to up. Sometimes the path is clear and you have odds favorable momentum, and that market just seems to turn. There's another termination condition that we're going to talk about, and this is the one that you're going to recognize on a smaller, faster chart. 3 divergences. Divergence is a loss of momentum. Every time this cyan line prints from a low or this magenta line prints from a high, it means that momentum isn't following price. That's all it means. There's a little slowdown behind the scenes. Your indicators come together, they take care of it. When it happens 3 times in the same price range, it might terminate the trend. 3 losses of momentum is a pretty powerful indication. It becomes more powerful still when your small triggers work their way inside of the large triggers. You go from odds favorable momentum. Remember, the look is universal. Whether it's a small chart, a large chart, a range chart, a month chart, it doesn't matter. Momentum is momentum is momentum. When those small triggers work their way inside, you've reached that anything can happen stage, and you've coupled it with 3 losses of momentum. Very powerful. When your final pivot, your third pivot, is higher than the previous, it becomes more powerful still. This is one of those head and shoulder patterns, but what it really means is that price didn't have a problem exceeding the previous pivots until then, until that third loss of momentum, and now price couldn't even reach the previous, and we're losing momentum, and we have anything can happen triggers. Guys, this can be a trend changer, whether it's from a low or a top, and you're going to see this look on a smaller, faster chart when something like this may be happening on the larger chart. These 3 divergences from a low might help confirm a little bit of overrun on a Fibonacci. 3 divergences from a high might say, well, everything says up, but things are changing, be aware. These 3 divergences will not only keep you from taking trades into potential areas where the market may turn, but it's also going to allow you to manage trades. If you enter a trade and you're looking for that bigger goal, but 3 divergences print, it's going to give you this giant waving red flag that says, hey, maybe it's time to take profits. Maybe it's time to get out of this trade. Things seem to be changing, and it's going to create an opportunity for you like that. So guys, termination conditions give the idea, give the advantage of a clear path, right? Oh my gosh, NASDAQ is moving. There's another one of those odds favorable momentums with a tail. There's another one of those odds favorable momentum with a pullback. So guys, now we want to see, we've identified momentum, we've identified trend. We know how to identify termination conditions. Let's see if we can find any on this chart. And let's just kind of strengthen the way we study, right? Smalls are through, large are not. It's one of those 50-50 trades. We'll keep it. Smalls are breaking through, large or not. We haven't reached that divergence line yet. We're going to look at both of these as we come through. Smalls are through, large or not. Remember that 50-50 is going to be the vast majority of your trades. Guys, we're going to keep all of these tails and see if we can find a trade. At the same time, when price reached support, look at the reaction. It lets you know no more short trades into that area that may stop the market. Now we have one of those pivot stop outs right at support. And look how the market went the other direction. Termination conditions may stop a market for a while. It may stop it for a moment. And sometimes the market will get caught between support, termination condition, and resistance, termination condition. And you have to wait for it to sort itself out until the advantages are present. Guys, do you see how easy it is to study? Odds favorable, see a tail, circle it. Make sure it's not trading into a termination condition. And then we're going to take these tails, guys, and we're going to line them up on a smaller, faster chart and see if we had a high probability trend trade. Is everybody up to speed so far? Guys, I don't want to lose anybody. This is that foundation. This is that strong base you're building from. Large chart, strong triggers, advantage of momentum. Everybody's good, right? Easy to recognize. Get there in a second. No termination conditions means that you have a clear path, guys. It creates a huge advantage. Steve, I do watch the NASDAQ because I am very comfortable with my rules. And I've done a lot of simulation and study on it, and I feel comfortable with it. New users, NASDAQ moves 3 to 5 times faster than a regular chart. Absolutely. Steve, I trade a 34 as my large chart, a 34.5, and I take my entries on a 13.2. The template for those, if you're curious, guys, they are available in the resource page. Steve, you can go through and download them if you need them. Guys, you have to create a foundation. You have to have an understanding. So we have momentum and we have a clear path. And now we're going to talk about finding that area where the market is likely to continue. I do, Jerry. I do. My NASDAQ setup, for those of you that are curious, 34.5 is my higher time frame. 13.2 is my entry chart, and John Novak has set up the indicators to make it look exactly like a 5-1 chart. The patterns are the same. And then I do use a range chart. I only use it for momentum and direction. I don't use it for signals, though. It's just too large a chart. Rule number 3 is how you guys are going to pinpoint your entry, guys. And rule number 3 says that you're going to use a limit order, which means that you're going to wait for the market to come to you. And you're going to use that limit order to buy or sell a pullback. A pullback is a small retracement in price, guys. It means that the trend was up and there was a tiny little pullback against that trend, and then the trend continued, right? So what we're looking for is a tiny pullback that's counter to the underlying trend, and we're going to use that limit order at an area inside of favorable large triggers. So not only are we going to let the market come back to us, we're going to let it come back to a line, to a fib, to a midband, to yellow 1-to-1s, and we want those areas to be inside of favorable large triggers. Favorable large triggers means that your large and your synthetic are trending one on top of the other. Your large triggers, the smooth dashed lines, are from the 5-1, guys, from your small chart. They're native to that chart. It's your slower moving indicator. Your synthetics are the same large triggers, but from a higher time frame. When they work together harmoniously, when they overlap one another, this is your best chance, guys. This is the best look because it creates a smaller window of opportunity. And that smaller window of opportunity means that you can reduce risk dramatically. So insist as a brand new user on that look for favorable large triggers. Give me just 1 second, Daniel. For NinjaTrader 7, dun, dun, dun. I got you. Let me go to my templates and real quick in my chart. And I think I've already zipped one up for you. There's your templates. That'll get you squared away. No worries at all. And that's just the 13.2 and the 31. I don't have a range chart template, Daniel. You'll use the generic market flow template for that, for your 21 range if you're using it. So guys, we're going to use a limit order to buy or sell a pullback. at an area inside of favorable large triggers, which means that when we have the advantage of momentum, when we have the advantage of no termination conditions, your smaller chart's going to look like this. It should have odds favorable momentum. Your large and synthetic should be wide, one on top of the other, creating that favorable trigger load. And you're just going to identify the areas that are falling within, fibs, midbands, and one-to-ones. And there's nothing to do yet until you get a reversal bar, until you get that signal that the pullback is beginning. Guys, at the time of this reversal bar, you're going to create a window of opportunity. Nice. Steve B, I went from 32 to 64. Honestly, I don't know that it made a difference. It never hurts to have more memory. And Steve B, if you have NinjaTrader 7, guys, one thing that a lot of people are doing is they're taking their NinjaTrader 7, right? And from NinjaTrader 7, they're getting all the information that they need. They're doing all of their analysis 100%. And then on NinjaTrader 8, executing trades. That's kind of my setup. For those of you, NinjaTrader 7, large chart, small chart, and then I'm using NinjaTrader 8 with absolutely no synthetics for execution for my Apex account. And that seems to work pretty well for a lot of people. Guys, when the reversal bar prints, let's create a window of opportunity, that area where the market is most likely to continue. For a long trade, your window of opportunity extends from the top, the highest point of support, to the lowest point of support inside of favorable large triggers. For a short trade, it's going to extend from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. So the reversal bar prints. The triggers are favorable. Everything says up on your 13.2 chart. Everything is clear on your 13.2 chart. You're going to define from the highest point of support to the lowest point of support inside of favorable large triggers. And you're going to activate that limit order, and you're going to wait for the market to come back to you. And if that market comes back to you, you're now in a long trade. Guys, you're in a trade with the advantage of momentum. You're in a trade with the advantage of no termination conditions. Let's go back to the manual. You're in a trade where the recipe has been met. You have strong triggers, you have no terminations, and now you have that entry area, that point where the market is likely to continue. That line, fib, midband, yellow 1-to-1, inside of favorable large triggers. Guys, this is your best of the best. This is your highest probability trade. Shogun, you can run both. If you have a NinjaTrader 7 license, you can use that license for your NinjaTrader 7. And then if you're using an Apex account, they will give you a license. And that's what I run on my 8. Your window of opportunity for a long trade, guys, from the top of the triggers to the bottom of the triggers is not your window. This is where we're looking for those areas to reside. From the highest point of support to the lowest point of support inside of favorable large triggers, guys, that's where the market's most likely to continue. Can you give me a Y in the room? Wait for the reversal bar, identify the window, limit order at the top of the window, guys, because remember, your 13.2 is screaming like a banshee to the upside. Your 13.2, your large chart has nothing in the way. There's only so much those guys that are willing to fight the trend can do for you, and it typically comes right back to the area inside of favorable large triggers. This is a window. This is a range. We're going to enter at the top because of the momentum, because of the clear path. But guys, we fully expect that it can go to the bottom of that window. Which means that every time you enter a trade mentally, you have to be prepared to see your P&L go negative. To see a trade that didn't stop on the tick where the market's likely to continue because it's an area. It's a window of opportunity. It may go to the bottom. But we can use that window of opportunity for smart stop placement, guys, putting our stop where the market shouldn't go. If this trade, if this market If the people that control the market, because it's not us, continue pushing beyond that window, guys, we have a stop waiting for them. We're saying, I no longer have the advantages. Therefore, I will exit this trade and I'll wait for the next. I'll wait for the next opportunity. Initial stop goes below that window of opportunity, guys. But this is a trade that I'm going to take 1,000 out of 1,000 times. This is the trade that I built a plan around. Because 70 to 80% of the time with those advantages present, guys, this is your high probability trend trade. This is your absolute best of the best. This is the trade that typically wins more than it loses. This is the trade that can give you a plan capable of winning while you expand your knowledge, while you continue to study looks, while you continue to participate in class. You're going to be able to study and build trust in this. Oh my gosh, NASDAQ goes nuts, doesn't it? And it's really pretty simple. With odds favorable momentum, we have an area with the potential to break. Get a reversal bar and look at that midband inside of favorable large triggers, guys. We just saw live a potential entry, right? And if I circle that tail, look how it lines up with the midband inside of favorable large triggers. But it's one of those 50-50s. This area hasn't broken yet. It only has the potential to break. That's not a high probability trend trade. And a couple divergences, giving up the advantage of momentum when we don't have the clear path, guys, that creates challenges. But let's scroll back and look at some of these circles. Let's see if we had entries. Debbie, your plan should more than it doesn't, right? There's those termination conditions. This one pulls back to support inside of favorable large triggers, overruns a little bit. This one pulls back to the bottom of the window, overruns a little bit. Guys, this is one of the challenges of NASDAQ. NASDAQ likes to overrun areas, and you have to be super confident. This was a trade that happened right when I opened my charts. Guys, this is one of those 50-50 trades. This is smalls below the large are wide, they're angled in the direction of the trend. There's a no divergence, strong trigger, pull back to resistance inside of favorable large triggers. The market stays within the window and continues all the way down to Fibonacci support. Guys, this is your best look. This is the look that gets you paid. This is the look that you never want to miss. This is the look that creates advantages. Guys, when you begin to study this look, you'll be able to take it exactly the way Safia took it. Everything says down. Look at her entry, guys. Picture perfect. Look at her exits. Picture perfect. Guys, this is a 50-50 trade. It's a medium probability trade. And she didn't sacrifice any other advantages, and she found success. Nice trade, Safia. So guys, you're going to spend 30 days working on entries, or 20 trading days working on entries. I'm going to give you a checklist to make that happen. This needs to happen in order to enter a trade, right? This is your best of the best. Is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? Guys, here's a video on recognizing good tops and bottoms, just in case you need a refresher. Do you have the momentum? Is the path clear? And can you identify the entry area? If you're marking yes to each and every one of these guys, I've never had a trader do worse than 70%, ever, in the history of presenting this. Take this checklist, guys. Begin to police yourself, but more importantly, write your rules on the chart and make sure that you do, in fact, have those rules met. Present that chart in the classroom, get feedback, make sure that you're practicing the right trades. Here's the exact same checklist, guys, but I stole pictures from the resource material. What is a strong bottom? What is a good bottom? It's a termination that creates a full reversal. Once again, there's your video just in case. Is there odds favorable? Guys, here's the look. Here's what it means. Here's what it means when you give away that advantage. Let's identify termination conditions and make sure that the path is clear. And here's a little something on those windows of opportunity. And then finally, guys, you're going to take this very basic foundation. You're going to take this best of the best, this simplicity, and you're going to turn it into a plan. You'll write your own plan eventually, but because I want you to be successful as soon as possible, I'm going to give you a simple plan for consistency, guys. And it starts with never fight the 13-2 direction. Trade with the trend. We coupled that with never fight the triggers. Guys, there's two ways to ruin your day. Fighting trend, fighting triggers. It's one of the biggest money killers that I ever see with new traders. Identify your trade. My trade it's the high probability trend trade, right? Put a picture in there. What's your high probability trend trade look like? Click on that link. Well, it looks like strong triggers and no terminations and pullbacks to resistance. That's my best of the best, guys. It's written in my plan, and visually, I can see it. What's it look like going the other direction? It looks like strong triggers and no terminations, and it looks like a pullback to support inside of favorable large triggers. Notice that these users have a checklist. But guys, that's my best of the best. So I've written a plan that keeps me focused for my first 20 days on nothing but entries. That's it. Nothing but getting in at the absolute best of the best spot, because when I have a great entry, it creates a manageable trade. So I want you to think of day trading, of learning the software as eating an elephant, guys. And if you try to eat an elephant at once, it's overwhelming and it's easy to get discouraged. But if you take it one bite at a time, it doesn't seem so daunting, guys. Your first bite is entries. Focus on your entries. Take all the pictures. Don't worry about what happens afterwards. Get the best of the best and verify that you can follow those rules to give you the highest chance of success. Then you're going to work on management. The way a mechanical checklist-based entry is advantageous for new users, a mechanical exit plan is just as advantageous, guys. And it all revolves around great entries. When you're in at the area inside of favorable large triggers, your stop goes where the market shouldn't, beyond that area. Guys, 20 to 30% of the time, your stop is going to get hit. It's a cost of doing business. Trades that don't win are a natural part of a positive equity curve, guys. I'm never going to tell you that you're going to win 100%, which means mentally you have to be prepared. It's a cost of doing business. At this point, from the great entry, your stops where the market shouldn't go, there's nothing for you to do at this point. Lift your hands up, put them on top of your head, roll your chair 6 feet back, guys. You're either going to get stopped out or that market's going to give you a reversal bar. And if it gives you a reversal bar, you're going to reduce your risk. You're going to go from outside of that window of opportunity to about 2 ticks above that reversal bar, because now the market's doing what the market said it was going to do, what the advantages suggested should happen. So you go from 12 to 14 ticks to maybe 8 ticks, right? Little less money on the line. But there's nothing to do from here, guys. Once again, hands up, roll back. You're either going to get stopped out for a small loss, or all of those advantages compounded are going to take you to your first target. Your first target is $100. And if you reach that first target, $100 goes in your pocket, $100 in the bank, it's in your account. They can't take it from you, guys. You just won. There's a dopamine kick, right? You're developing confidence through the memory of success. And not only do you have $100 in the bank, but now you have a break-even stop in place, which means that nothing bad can happen to you. And you feel good about it. I got paid, nothing bad can happen. And it makes it easier for you to trust the advantages on the 13-2 to get you to your second target. And your second target is $200. But at this point in time, there's nothing for you to do. You're either going to get stopped out, break even, you still made $100. Guys, a trading plan that does that 3 times a day, that never hits that final target, $300 a day, guys, doesn't sound like a lot until you realize that if you do that 5 days in a row, you just made $1,500, right? And if you do that consistently for a month, that adds up to a $6,000 month. And I know I have some math whizzes in here, guys. That's a $72,000 year, isn't it? From 3 trades that never make the second target each day, having every advantage in place. Guys, your goal isn't more trades, more opportunities. Your goal is the best trades. You can compound earnings with more contracts. It either goes to that target or it doesn't, guys. That's it. Those are your only two options. If it doesn't go, you're stopped out break even. If it does go, you just made $300 in a matter of minutes with the advantage of momentum, with the advantage of a clear path, and with the advantage of having taken an entry at an area where the market is likely to continue. And you're going to study this look every day until you can do this. Termination condition, creating a full reversal. Full reversal gives you a pullback to the area inside of favorable large triggers. And take that money with odds favorable momentum all the way up to fibs. John Novak, that may have been the best timing in the history of this classroom. Isn't this amazing? So guys, I want to show you how easy it becomes for you to do exactly what you need to do to gain trust in these rules, to gain confidence in these rules. I'm going to take a high probability trend trade checklist, guys, that same checklist that I gave to you. And I'm going to grab an arrow. Is the market coming from a good top or bottom? Guys, this is a termination condition that creates a full reversal, so I'm answering yes. Did I have odds favorable momentum? Smalls above the large are wide, they're angled in the direction of the trend. The answer is yes. No termination conditions. Price hadn't reached that divergence high yet. It was close, but it didn't make it. The answer is yes. And did I have an area inside of favorable large triggers? Once again, guys, this is the highest probability trend trade. This is a trade that typically wins 70 to 80% of the time. This is a trade that went from 76 to 06, which is 30 points in the NASDAQ, right? And at $20 a point, that's $600 of profit per contract. I'm pretty sure John Novak trades a 10 lot, which means that was about $6,000 in the bank based on the absolute best of the best trade. Guys, this is your foundation. This is your trade. This is the one that's going to change the dynamic of your trading. This is the one that's going to bring you success, that's going to build confidence, that's going to teach you to read your charts. This is your focus for the first 30 days. Is everybody cool with that? John says he was on the phone with Ninja Tech Support. To be honest, his last trade's over goal already. Everything says down and he goes short and he takes it to support. From support, he finds an opportunity for a long, takes it up to resistance. And then he fights that trend and he fights those triggers. Doesn't go anywhere, gets out break even, good management. A lot of you are going to fight this in the beginning, guys. You're going to say to yourself, Mark, or you're going to say to yourself, Bob, I'm too damn smart to take pictures and post them in the class. If I don't have to take a picture, because the reality is I'm going to remember everything I do because I'm really smart, right? And I don't need to use a spreadsheet because I remember everything. I'm never going to have to learn patterns or recognize patterns in myself. I'm good. I'm not going to write rules, right? I'm not going to follow a plan. And then about 30 days from now, you're going to come back and you'll be like, hey, Mark, do me a favor. Show me those rules again. Let's talk about that plan one more time. Help me get focused on the best of the best because I tried to do it my way and it didn't work. Guys, I'm speaking from a place of experience. That's what I did. My brother wrote the software and I fought the plan and I lost a lot. Gap theory is your Achilles heel, Debbie? How do we fix that? I'll tell you what, guys, I'm going to take a break. I'm going to let you watch the market. I've got so much stuff open. We'll watch the NASDAQ. It sure moves a lot. Doesn't it? And it moves fast, guys. Maybe something a little more mellow. There's one of those 50-50s with no divergence. Pretty cool. Let's see what the S&P is doing. That's the NASDAQ. Maybe I don't have the S&P open. We'll leave it on the NASDAQ. Guys, I'm going to take a quick break. I'll be back in 5 minutes. When I come back, Debbie, we're going to have a lesson on the gap theory. And we're also going to look at the pictures that you guys have posted, and we're going to talk about them, and we're going to talk about the rules. And John says that great top on the NASDAQ makes for easy shorts. Termination conditions that create a full reversal, guys, are the prelude to the best of the best. I'll be back in 5 minutes, and we'll get into your pictures, guys. We'll get into the gap theory, and we will continue. Back in a few. And Hammer, first off, welcome to the class. It's great to have you here. And Hammer, there's a reason that I teach the way I teach, because what becomes easy, and it can start off a little daunting, right? It can start off, it really feels like you're drinking from a fire hose in your first day or two. I completely understand that. I've had a first day. There was a point where I was brand new with the software as well. And that's one of the reasons why I teach the way I teach. And I want you to embrace simplicity. And the only thing that you have to be able to do on day one, the only goal that you should set for yourself is, can you identify rule number one, odds favorable momentum? So Hammer, your job in the beginning, and guys, really everybody that's going through this process, because it is a process, you have to learn. It's kind of like you have to learn to count before you learn to add. And you have to learn to add and subtract before you can divide. Step one is odds favorable momentum. Step one is rule one, identifying that advantage of momentum. And guys, it really isn't a difficult task. If there's a separation between the small and the large, well, then you have odds favorable momentum. We're going to use this odds favorable momentum to create opportunities. And then the second key, the second idea, the second task, when you're comfortable with odds favorable momentum, whether it takes you a day or a month, once you have those strong triggers, well, then you're going to get into the habit of identifying termination conditions. You're going to look for these areas that may reverse the market. One step at a time, right? One bite at a time. And then once you can identify a termination condition from a high, so Hammer, here's a picture. Let me put it in the room for you to help you identify. Once you embrace that idea that if price reaches an area and absolutely no trigger lines go through it from a high, the triggers remain below, you've identified an area that may stop the market, well, then you're really just developing trust in that idea so that you don't trade into these areas, so you keep yourself safe. From a low, it's the exact same look. So what we're doing is we're coupling, we're adding, we're embracing the idea that we start simple and then we'll move forward. If you walk in and you say, I want to be a trader, there's elements that go into it. But if you walk in and you say, hey, I want to be a chart reader, I want to be able to identify these advantages, and I'm going to let it start with making sure that my momentum is its absolute strongest. And then when that momentum is its absolute strongest, I'm just going to make sure that there's absolutely nothing in the way. And then once there's absolutely nothing in the way, well, then I'm going to learn how to define that point where the market is likely to continue. Because there's that look of odds favorable momentum. Price hasn't reached the area. So now I'm going to look over on a smaller chart for that area inside of favorable large triggers. And this is where I'm going to get in. And this is how I'm going to get paid. So Hammer, I'm not going to disagree with you. There's some moving parts to it, right? So refine that process a little bit. Make that process as easy as it can be. If you're not comfortable with odds favorable momentum, let me know. We'll go through, we'll study it. We'll get you comfortable. And then we're going to go to that next step. Then we're going to talk about termination conditions. And then we're going to link that to an entry. And once you can take this entry, it gets pretty amazing at what you're capable of. Because every entry, guys, every rules-based entry creates an opportunity. It creates an opportunity to create trust in the methodology. It creates an opportunity to learn how to manage that entry, keeping it mechanical at first, and then getting to the point to where you can begin to hold for bigger moves. You're going to begin to recognize patterns in the market. You're going to begin to see termination conditions where you didn't see them before. So guys, if you feel a little overwhelmed, if you woke up and you're like, oh my gosh, I thought I was going to be a millionaire inside of a week, that's not realistic, is it? Not even a little bit. But the idea is that you can get to where you want to be. You just have to get past this stage. Where'd my picture go? You have to get past this stage where it feels a little overwhelming, where it feels like there's a lot coming at you. And you do that through simplicity. You do that through keeping it easy. You do that through staying focused on the absolute best of the best, by following the path, by giving yourself the advantages, and then working from those advantages. So Hammer, I'm ecstatic to have you in this room. And I think that there's some people that'll probably tell you by the end of the first week it begins to clear up. By the end of the second week it really makes sense. 30, 60, 90 days in, you're going to be absolutely amazed at what you're capable of. Absolutely. It's great to have you here. And I'm here for 15 hours every week, Hammer. All you have to do is ask a question. 15 hours live. Show me a picture, ask a question. I'll give you everything you need to be successful. I'll even give you this path to get you there. And we'll do it together. It'll be a lot of fun. Second half of the class, guys, is me looking at what you're doing. Taking a look at your trades, talking about them. What were the advantages? What were the disadvantages? Safia got us going today. Safia went straight rock star on this one. Look at the momentum on her chart, guys. Smalls below the large are wide, they're angled in the direction of the trend. Every advantage with momentum. Rule number 1 has been met. So she turns her attention to termination conditions. And she identifies that the small triggers are through with odds favorable momentum, but the large triggers are not. And she immediately knows that this goes from high probability to medium probability because she doesn't have the advantage of a clear path. Safia has a plan in place that says if no divergence prints, right, no loss of momentum, not sacrificing momentum when the clear path isn't present, that she'll enter at the area inside of favorable large triggers. And guys, this is the perfect trade. This is the perfect medium probability 50-50. This is everything that we look for. And Safia takes profits all the way down. Beautiful trade. And guys, the rules are consistent. Because here's the exact same trade with the exact same entry and the exact same exits. One is taken by a gentleman that wrote the software that's been running Nexgen for 25 years. And one is taken from somebody inside of their first 6 months. Guys, it's the exact same trade with the exact same advantages. And then Ron comes in and says, you know what? I can read a chart. I can identify momentum. I can identify a clear path. But rather than taking the trend trade, I'm just going to take a little chunk of it on the way down because that's the right trade for him. That's what his plan says. And it's interesting because Ron gets in after it turns. And guys, this was a rules-based trade that didn't work. This was odds favorable momentum, and this was a clear path, and this was strong triggers. And this was an entry at the area inside of favorable large triggers, guys. And there's a stop getting hit right on the other side of that window of opportunity. You added contracts. Guys, one of the biggest advantages of this room, and I can't stress this enough, is if you present this trade to me, and guys, these are the trades that upset you. These are the trades that make you question things, right? Is the market coming from a good top or bottom? Absolutely it was. We had a termination that created a full reversal. We had odds favorable momentum and we had no termination conditions, and there was an area inside of favorable large triggers. Guys, this is a trade that typically wins 70 to 80% of the time. How did I get down there? Typically wins 70 to 80% of the time. And what that means is that 20 to 30% of the time, we're going to allow the market to be wrong. We're going to allow the market to make a mistake and take us out of that trade. Guys, this was my trade. This was my loser this morning. This was me taking an acceptable loss, a normal part of a positive equity curve. And I'll take this trade 1,000 out of 1,000 times, guys, because I'm going to win more than I lose when I take this trade. And I like to show that. I like people to realize that not every trade's going to be a winner, and it's okay. Keep your head in the game. I actually got in a little bit later after that one. I made all my money back plus 100 because I stayed in the game. I embraced the advantages. There it is. When it overran a little bit, I took a signal and entered the market. And guys, that went right down to my second target. I tried to move it down to Fibonacci, but it happened too fast. Made it all back. Gary says, I do have a pivot stop out at support, and this is an amazing termination condition. And at the point of entry, he hadn't reached Fibonacci resistance yet, and he takes a little pop right off of a HVA line and takes it right up to resistance. Little snippet, quick cash. And then the second potential trade, and Gio, thank you for posting this one. And your charts are bigger. I love it. You did have a strong bottom, and you took advantage of it. You did have odds favorable momentum without a question. Rules 1 and 2 were met. But guys, do you see how price reached resistance and none of the trigger lines have broken through yet? So this is a termination condition. And a termination condition can create a bounce, and it certainly did. And it creates a small loser, great management. But guys, don't let breaking rules take from your great trades. Don't let breaking rules take away from the P&L. Let the great trades be great trades. Take the profits. And then Gary says that's a termination condition. I'm going to sit on my hands. Sometimes great pictures are the ones that aren't even trades at all, guys. They're just acknowledgement of what you see, reinforcing your rules. Gary says from a bad top straight to the mid-band. Trying to figure out what you did here. You took a long, I can't see your entry on the small chart, but one thing that I notice on that long is that you gave away the advantage of momentum, right? Anything can happen triggers typically give us a pretty good push. Odds favorable, weakening, slowing, and it pushes right back to the mid-band. Nice management. Taking a shot. Nice job, Gary. There's that pivot stop out right at resistance. There's that pivot stop out. Just waiting for the S&P to break out. Guys, it's okay to wait. It's okay to be patient. 90% of what you're doing is reading indicators. 90% of what you're doing is chart reading, making sure that the advantages are present. And then, guys, I love this heads up. He gets in, it doesn't work. He doesn't panic. He doesn't change his thought process. He says, I'll just wait for the advantages, and when they're present again, I'm getting in. And I'm not sure why you got out so quick on this one. Managed way aggressive. Didn't even give it a chance to make a bar. That's a little quick, right? Just a little bit. Guys, give it a chance to do what it does. Wait for that reversal bar before you start moving stops. There's nothing worse than getting stopped out of the perfect trade. Alex, let's see what you did. Alex says termination creates a full reversal. Full reversal gives me odds favorable, and he takes the momentum style right at the mid-band, right at the 1-to-1s, and gets paid. Alex, beautiful trade. Man, that's a good-looking trade. Guys, this is the momentum trade. It starts with a termination condition. It has strong triggers, a little pullback. Man, execution spot on. Beautiful trade, Alex. I lost my place. Here we go. Coming back to it. Guys, if you're brand new, this is what we do every day. We talk about the rules. We give you your checklist, we talk about advantages, and then you just show me what you're doing and we talk about it. Sometimes all I can do is praise, right? Man, great trade, great execution, awesome advantages, look what you did. Sometimes we're going to say, hey, maybe there was a termination condition there and that took away the advantage of a clear path. May have been part of the reasoning that that trade didn't work. Let's eliminate that from your plan so that we can grow and move forward. Guys, this is a termination condition that creates a full reversal. The full reversal gives odds favorable momentum, but we see that it's a 50-50. Gary says on a 50-50 trade, where I don't have the advantage of a clear path, if I give up momentum, if divergence prints on the smaller, faster chart, he'll wait for a market flow signal before entering the market, which means that this has to be a reversal bar, a yellow reversal bar, an antenna bar, or an actual signal going into it. And I'm not sure if he got it or not. The suspense is overwhelming. Debbie says, here's that 50-50 trade, right? Great top, full reversal, smalls below. She says, I'll take it with one divergence because of the good top. Beautiful entry. Stop keeps her safe. Money is made. Money is made. Debbie, beautiful trade. Everybody's got a different plan, right? Gary said, I need a signal to take it. Debbie says, from a good top and momentum that strong, can't keep me out of that one. Debbie, is it just me, or have your last couple weeks really gotten comfortable for you? Every trade you take looks exactly the same. I mean exactly the same. I feel like you found your groove, and it's working for you. Stick to that plan. Nice job. Where are we? Here we go. John in Alaska. Off the grid. Oh, you are in Alaska. Here's your first trade. Let's see what it is. Great top. Odds favorable. Rockstar entry. Money, money. Nice trade, John. Everything we teach, right? Here's a good top. Notice that his rules are written on the chart. There's no way to not embrace this. I mean, that's outstanding. Guys, once you have that knowledge base, you can go off the grid for a while, come right back and make some money. Good morning, Joel. Kind of a gap, right? Bad bottom. Joel, do you see how price reached resistance and the triggers didn't make it through right here? And you have 1, 2, 3 areas that haven't broken. It's not quite the gap theory. The large triggers are too close. But it is termination and a slew of areas that haven't broken. Good picture. Great patience. John Novak says rinse and repeat. Everything says strong, take a short, get paid. Everything says strong, take a short, get paid. Rinse and repeat. Nice trading, John Novak. Maybe it's weird, guys, but I get pretty excited when the guy that wrote the software takes the exact same trades that you take. We saw this one. John said having a divergence on the 5-1 makes it more likely the problem in the 13-2 will persist. Who posted this one? I want to be able to... Alex, this was you? Let's talk about it. Cool. Alex, perfect bottom, right? Strong triggers. So... first part of the checklist, second part of the checklist. Can I explain why it's okay to take this? Absolutely. So Alex, let's go back to what defines a termination condition. And I want to show you a picture that I made for these divergence highs and lows. So blue Fibonacci support, red Fibonacci resistance. These are areas. Are you comfortable with that, Alex? Because what it is when Fibonacci areas come to be, they are just enormous amounts of calculations. I'll post this one too. So to create a Fibonacci area, your software goes back 10 days, 20 days, 30 days, whatever you have going back. It measures every pivot in the market, every swing, every movement. It creates synthetic time frames forward, higher time frames, different time frames, all these different things, guys. Thousands upon thousands of calculations. And then it starts to sort them. It weighs them out, and it creates these Fibonacci areas. So a tick or two, a tick or below, absolutely. It's an area. Take care, John. Does that make sense, Alex? And this is the lead up. Everybody, this is how fibs come to be. It looks like this. But here, when we look at a divergence low or a divergence high, and I made this picture for another one of our users, because divergence highs and lows are two of the most ignored areas. When the market has a divergence high or low, that line represents a specific point, a specific price, where not only could the in control force no longer move in that direction. So example, that divergence high in the picture, Alex, it was this point right here, this specific price, where the buyers stole, or where the sellers stole the momentum from the buyers, right? It's one tick, but this is specific, Alex. This price is cast in concrete. This price is the exact price where the buyers lost. Does that make sense? The exact price where the buyers lost out. But even without the bottom. So that becomes a line in the sand, and it becomes a very definite line in the sand. Because what happens, Alex, is this is where the buyers failed the first time. Right at this line. So as the buyers approach that line, we can assume that there is a potential group of sellers waiting, right? There's a potential group of sellers waiting to push one more time at that divergence high. They haven't quite gotten there, and it's only a tick, but they haven't triggered their alarm system yet because they haven't found that price. And the fact that the sellers tried to push into support and the buyers pushed back and the sellers said nope, but that support held like a tank, like Plymouth Rock. That's a beautiful termination condition. That's a pivot stop out. It's at support. It's at Fibonacci. The triggers are strong. We haven't reached that line yet. You can even see it here. And then we've got that pullback. We've got that small risk area to get to the next area. So the specific line hasn't been reached. And then that beautiful termination condition that creates a full reversal, Alex, only adds fuel to the fire. Triggers are strong on both areas. Does that make sense? Awesome. And guys, these are the questions that make us just a little bit smarter. Thanks for that, Alex. And man, if you ever see somebody post a chart and you can't figure out why I'm saying what I said, ask that question. Let's get it. Safia, everything says down. Whoops, you missed the best entry. Didn't you? Caught you on a coffee break. So missing the first one, you got the second one. It's beautiful. Profits at support. And then you were a tick or two above that mid-band and it just got you, right? Right into that support. But that was your third divergence in the same area at support. I think you did it nicely. That better entry definitely creates more opportunity for money. Sometimes we miss the first one, guys. Make sure nothing's changed when you take the second. Sophia, that's a great looking trade. And then John posted that file, guys, of the videos. 4 videos, 6 hours of your life. Change your world. Hey, Em. Nice to see you in here. Let's see what you got. Termination creates a full reversal. Full reversal gives odds favorable momentum. Notice how the small triggers, Em. I'm not sure if you took a trade here. Small triggers hadn't broke yet. So we're kind of looking at a termination condition. And those 3 divergences say that it may push lower. And then when everything rolls, notice that when all of your triggers, smalls roll, everything goes green, you get one more little pullback, and that's what starts the move. So, M, this is a great idea. 3 divergences in the same location lets you know that it may push a little bit lower, right? That's straight from the textbook. That is straight from tops and bottoms, straight from termination conditions. M, I don't know if you're with me. I hope you are. 3 divergences may make it push lower, right? It's a loss of momentum. It's 3 losses of momentum. So if you took that first trade, get out with the 3 momentums, right? And then just wait. Wait for everything to roll, because sometimes trades don't work. But once everything rolls, and let me take a picture of yours and I'll show you exactly where I'm talking about. Everything says up. It's coming from a great bottom. Everything says that market wants to get to the upside, right? 3 divergences say that it may push a little bit lower, and that's exactly what it does. It pushes a little bit lower. There's a point right here where all of your triggers have gone green again. No divergence on this little pullback to the small triggers right at an area after the overrun. That's a great opportunity to find your way back into that trade. That's a continuation look to get you into the trend trade where the rules are still met, but it just didn't work out. And I do believe I have an actual picture of that I can share with you here. Here we go. Sometimes the perfect trade just isn't going to work. 3 divergences. This looks almost exactly the same, doesn't it? And that's from the March 23 ES. 3 divergences kind of kill the perfect trend trade. It pushes lower. And there's that exact same look. So, M, that's your second chance, right? It was a great read. It was a good trade. Those sons of guns just didn't want to go immediately. And look at how similar this look is to the one that you just posted. Isn't that crazy? These patterns repeat themselves all the time. So that's a great opportunity for you to say, okay, this trade didn't work, 3 divergences, but are the conditions the same on my 13.2? Do I still have strong triggers? Is that path still clear? Well, then I'm going to look for an opportunity. And what you're going to find in more often than not is that this price is almost the exact same as this price. The market just had to shuffle a little bit on that smaller, faster chart. Does that make sense? Does that help a little bit? And guys, I put this picture in for you, and notice how it never broke the low of the triggers. Same thing with yours. It was a good trade. It didn't work. And now we're just going to teach you how to catch that second opportunity. Four triggers past the fib, no divergence, area inside, trend trade long. Absolutely beautiful. Guys, notice that he doesn't have odds favorable momentum, right? But he has a clear path. He has no loss of momentum here. He has an area inside. We could call this a medium probability trade. We could say that without that momentum, we still embraced every other advantage and things worked out great. And then that loss of momentum pushes all the way back to support. When all the charts agree again, there's that little giddy up looking for the upside. Sometimes you just have to be patient and let it do what it's going to do. And that little giddy up to the upside took John straight to his profit target. John, you are on fire today. You guys see it? No advantages, wait for the advantages, bingo. 90% of what you do during the day is going to be reading your charts. 10% is going to be trading. And is it just me, or has almost everything that he's shown today been a high probability trend trade, that foundational trade, that best of the best, those 3 advantages? All you have to do is develop the trust. It's just ignore, embrace it, learn it, study it, get comfortable with it until it becomes easy. Debbie, everything says up. You're coming from a higher divergence. Everything's cranking up. Beautiful entries out at the first target. You're keeping your risk on it. Everything continues up, and it is so close to that next target. I hope it got you. Nice trading. It did make it. The momentum said that it would. And some days are easier than others, for sure. All right, Safia asks, when should you have 2 separate contacts? Example, target 1, target 2, or 1 trade with multiple contracts. I hope this makes sense. So Safia, I always trade with multiples. I'm not saying that it's right or wrong, but I always trade with multiples, which means that I always have 2 targets. So if I get into the market, I have 2 targets. But what I can do is if 1 target is appropriate, I can drag that line and I can put those 2 targets as 1 and maybe put them there if it's just a 1 contract scenario. Does that make sense? So I always start with 2 targets. But if maybe it's a little more medium probability, if maybe I just want to get out both contracts at the trouble spot, I can just kind of meld those 2 targets together. And all it is just clicking. Click the line, put it over the other, and it'll take 1 and go to 2. Yeah. So I'm always 2 contracts. I'm always 3 contracts. But if I say, man, things aren't working out right, I'm just going to take everything at the potential pivot stop out, I can put them together like that. It's easier than dividing them. Guys, here's one of those examples of when understanding termination conditions helps. Price pulled back to support. At the time price reaches support, all of the triggers remained above. Guys, if nothing else, this is a termination condition to the downside. This is an area that may stop the market. It happened to stop the market right at support in a mid-band. And that's what began the bounce with direction, with the trend. That's just chart reading, termination conditions, guys. And we can use Fibonacci to have an idea of where this market may want to go next. But first we have to make sure the small chart doesn't change. It seems like you're in medium probability you get stopped out. So Safia, are you managing a medium probability trade the same way you manage a high probability trade? That would be the first question. Do you have a different management plan for medium probability than you do for high probability? Guys, remember, every entry has its unique characteristics, right? So on a medium probability, so you do have an exit plan, but that second target, you get stopped out. So my question would be, if it's a medium probability trade, show me some pictures of some medium probability trades that didn't work. We'll see if we can find a common thread or a common theme. Do you have a couple? Because remember, they are medium probability, right? We do have to manage them assertively. The one that you took earlier, sent earlier, You've sent a couple today. The last one, the most recent? This one? Okay, so let's look at it together. Of course. So let's start with the obvious, right? The obvious is that had you been in at the best spot, it would have changed everything, right? Would have completely changed everything. But that's okay. Didn't happen. So doesn't even matter. So let's do this. Safia, you get in here. Let's change. And then you reach Fibonacci support, right? And you say to yourself, everything is so strong, I'm going to hold on to this trade. Sound about right? Let me double check this chart over here. You've already reached a termination condition. You get in before the termination condition. So you reach the termination condition, right, with weaker triggers, and you get two divergences. And you say to yourself, with two divergences and weaker triggers into a termination condition, I'm going to hold this trade. Totally cool. I'm not questioning your motives. And then, and I like the way you did this first contract. I really do. You said it's probably going to test it again. And you said, I'm going to get paid right here because that makes sense, right? I'm at a termination condition. It is a termination condition on my larger chart. My triggers are weakening. I gave it a chance to bounce. I'm going to get paid here. So then, Safia, then you get your third divergence in the same location, right? At the same price range. So not only does your large chart have a termination condition, but now your small chart has three divergences in the same location along with weak triggers. Are you following me? You knew about that right there, but you made the decision to ignore multiple termination conditions. You made the decision to ignore weakening triggers, right? So even though this continued down, maybe your management plan on a medium probability trade should respect those divergences just a little bit more, especially when we're losing momentum, especially when your large chart is hitting a blue fib and none of the triggers have gone through yet. Does that make sense, Safia? So you got stopped out. You got stopped out here from a third divergence at a termination condition. So a termination, you thought divergence was going down and head and tail, so you ignored. So you formed an opinion about what the market was going to do. You chose not to read the indicators. Does that make sense? And I know this because I do this too. Sometimes I'm like, man, I really think it's going to go further. And I begin to ignore things. And that's a tough stop, right? You're still inside of the large triggers. Maybe if you're going to let it run, you use the pivots. But that's a tough hold. Does that make sense? Does that help a little bit? And I think that the telling right there, I thought hurts a lot. It hurts me a lot. I thought it was going to go down. My indicator said it could create a bounce, but I thought it was going to go down. My termination condition said this is a spot that may stop the market, but I thought it was going to go down. Awesome. Management is the second part for a reason, Safia. Your great entries create manageable trades. Having caught that first one before the area was reached gives you a lot more wiggle room. Gives you a lot more wiggle room for sure. Great questions. And I think that was a good little review. 50-50, no divergence, perfect entry. Take that trade, Joel. That's perfect, isn't it? Termination condition creates a full reversal. Full reversal gives odds favorable momentum. It's a 50-50. Whoa, where did it go? Sorry about that. It's a 50-50 trade. Small's above, large below, but there's no divergence, strong triggers, tiny window of opportunity. And yeah, Joel, that was a perfect one. You were watching crude. No worries, that happens sometimes. T enjoyed the weekend videos, and there's that same one that Joel just took. T, beautiful trading. Great bottom, good momentum, very little risk, all triggers through. Bing, bang, boom. Let's get paid, right? What a great look. Everything says up. Termination conditions say that the area is likely to hold, not guaranteed. John says it's a medium probability trade. Let's give it a look. He gets in. Support holds the way support does. Trigger suggested that it would. Everything starts to say up. He gets a pivot in the direction of the trade, and there's a new stop after the next pivot. And guys, do you notice that that's 1, 2, 3 divergences in the same location coming from support? His trigger's rolled. His risk is minimal. All's right with the world. And then as this one continues, he takes profits at the trouble spot. He has no risk on the trade, and he's looking for the home run in the event that it decides to run. And then since he got a new pivot up, he has even less risk on the trade. That is a beautiful play-by-play, isn't it? And guys, it wasn't a high probability trend trade. It was a medium probability trend trade. It was understanding termination conditions, that when price reaches support and all the trigger lines remain above, support's likely to hold. If it coincides with a potential entry spot right there at support, it's a medium probability trade. It has to be managed. Nothing ever changes. No divergences print. The large triggers roll, the synthetics stay up, the small triggers roll. The only thing that changes is this trade gets more advantageous as it goes. Stop placement behind pivots. And off it goes. John Novak, nice trading. Odds favorable, clear path, perfect entry. Joel, your chart reading is amazing. Tell yourself that. Guys, tell yourself, I'm good at this. When you're doing things great, remind yourself that you're doing things great. If things aren't working out the way you want them to, oh my gosh, John Novak. Probably added on contracts at the area of support inside of favorable large triggers. Stop behind the new pivot, right? Entry, behind the pivot, medium probability, perfect trade. There's a pivot, stop behind the pivot. Are we going to Fibonacci resistance? There's a trouble spot. Let's see if we break it. Holy smokes, guys. Straight to resistance. Winner, winner, chicken dinner, bingo, whatever you want to call it. Guys, from 82 to 07 is 25 points. At 20 bucks a point, that's math. What is that? $500 worth of movement per contract? On a 5 lot, that's $2,500 worth of movement. On a 10 lot, that's $5,000 worth of movement. Straight to Fibonacci, guys. Straight to that area. You might even be able to get like a double whip frappuccino something. From fib to fib. So guys, as you learn this software, understand that it can be done, but it takes a little bit of study. It takes a little bit of practice to get to where you want to be, but you will get to where you want to be if you participate in class, if you post pictures, if you ask questions, if you seek clarity. You're seeing it happen, right? You're seeing it happen live. You see that it's real. There's his account. He's doing it on simulator because he's already reached his goal. I don't know. Let's find out. Whoops. I'm 5 days back. I did a full clean out this morning. I reset and repaired my database this morning as well. Guys, look at that. Straight from a termination that creates a full reversal. And the market did a grind all the way up to the next fib area. And there were opportunities on the way. Your job is to study until you never miss those opportunities, guys. Crude oil, termination or weaker triggers down to support. Pivot stop out right to the mid band. Alex, are you with me? And K-Pops, you'll probably dig this one too. Remember how I said that this represents a specific price? Look at that. To the absolute tick, guys. And this is why divergence lines make their way into termination conditions. It represents a specific price where the sellers rob the buyers of momentum, right? 68.66, that was the exact point where the sellers told the buyers to get bent. And as it approached it, look at those weak triggers, right? There's no reason to hope. As we approach this one, look at those weak triggers, nothing going through. There's no reason to hope. And now we're just in a holding pattern. Guys, termination conditions will save your bacon all the time. Termination conditions will create opportunities for you. And termination conditions will take opportunity from you. You just have to learn to study them and respect them a little bit. The market may still go up, but I need odds favorable momentum and I need a clear path. We'll come back and see how they react to 68.66 again. Guys, now I have divergence at a fib. I have 3 divergences in the same price range. How many indications do I need that the NASDAQ is trying to put in a top? That's quite a few, but my large triggers are still up. My small triggers are down. I don't have odds favorable momentum yet. And without that odds favorable momentum, there's no reason to get caught in the shuffle. Guys, I'm going to take a few minutes. I'm going to bounce around. Now you're done. I don't believe you, John. We'll see what happens with the NASDAQ here, guys. I'll leave it up. As we come into the final hour, I want you to do me a favor. I want you to just sit and have a little reflection spot. And I want you to say to yourself, what do I wish I knew more about? Debbie, I owe you an apology. We're going to talk about gap theory. I'm going to write it down on my piece of paper so I don't forget. We're going to talk about gap theory when I get back, guys. I'm going to take 5 minutes. We'll come back. We'll get in that last hour. First lesson is gap theory. Debbie, I owe you the biggest apology. I apologize. You are still in here, though. Good. And we'll go through that, guys. And gap theory fits into termination conditions. I'll be back in 5 or so. All right, guys, here we go. Last hour. Last hour belongs to you. First thing we're going to talk about is the gap theory. And the gap theory states that if price pulls away from the synthetic triggers, meaning your large chart triggers, too fast and too far into a Fibonacci area, it's going to snap back to the triggers. Guys, it's pretty simple. It's like price pulling away, hitting its head on something, and then falling right back to where it started. And you're going to see this on your large chart. If price accelerates away from those large triggers and hits a mid-band, well, that space between the bottom of the bar and those trigger lines, which are above your reversal bar marker, it acts as a vacuum. It literally will suck price right back, right back to those large triggers. And it doesn't say go long because you're in a downtrend, because the triggers are down. But what it does let you know is that it removes the advantage of a clear path. Because price is likely to pull back to those large triggers, anything that you do between the bottom of this bar and the top of these triggers is probably going to get run over more often than not. You'll also see it when Fibonacci is reached. It may reach 3 different areas. Notice how the trigger lines lag behind. This white line is your reversal bar marker. Guys, when price pulls all the way up and accelerates and those large triggers don't follow along, price is likely to snap back and close the gap to those triggers. So Debbie, this is the basis for it, right? This is what has you recognizing that you may be banging into something that might create a little. You use full reversal to Jim H, I use full bar. I don't say full reversal. I say has room to create a full bar. Big difference. I use full reversal. I use full reversal when I talk about termination conditions, meaning that the large triggers go from red to green, the smalls get to the other side, the trend changes, right? That's a full reversal. Does that make sense? I don't use full reversal to describe gap theory, so I just want to make sure we're on the same page. Gap theory you're good with, right? Full reversal means the market made a complete change from one direction to the other. Cool. So we can use this reversal bar marker on the larger chart to determine whether or not there is room for a full bar to print before it hits. More precise on a term, absolutely. So in order for it to be a strong bottom, Jim, this termination condition creates a full reversal. That's your strong bottom. That's your good bottom. That's your best of the best. Debbie, are you cool with that basic idea? If price accelerates into a Fibonacci area and the large triggers stay below the reversal bar from a low, or they stay above the reversal bar marker from a high. Oh, you just tend to ignore it. Let's find a couple examples. So a trend change isn't the same as a full reversal, right? And we'll use the NASDAQ right now as an example. So Jim, let's just go through it. The market's coming up, and now we have a termination condition. Now we have an area with absolutely no triggers through, and it may reverse the market. So we're going to be patient, right? No more long trades, but not necessarily a short, because who knows what's going to happen. This was a termination down here at 1.2 that ultimately broke and behaved as support. So this is just our clue. Hey, let's sit on our hands and let's wait and let's see what happens. I've reached a termination condition. The path isn't clear. So Jim, this is the progression of it. Here's your first reversal bar. It's just a reversal bar. It's not a reversal of the market. The bars went up, and then it creates a down bar, but we're still at a termination condition, still not looking for longs, but I'm not looking for shorts yet. I don't have a downtrend. I don't have odds favorable momentum. The next bar prints, and the small triggers begin to work below the large triggers. And Jim, this is what creates the trend change. So when you look at the relationship of the small triggers and the large triggers, when the smalls cross above the large, it paints that background green. When the smalls cross below the large, it paints that background red. It's not necessarily a trade yet, but what it is this is the phenomenon that creates the red background. But we still don't have a full reversal because the large triggers are up, the small triggers are up, and then the smalls are down, but the large are up. Whoops. The next bar prints. Now those large are starting to turn. Now they're starting to turn and pinch. And boom, Jim, now we have a full reversal of the market. We have that termination condition that creates the full reversal. We identify the reversal by your large triggers going from green to red. You'll see the small triggers first, right? When the smalls break below, the background paints red. Small triggers are the faster moving indicator, can create momentum, but it is a full when the large absolutely, when the large cross, when they go from green to red, when they change colors. Does that make sense? Perfect. Great question. And I'm glad that we had an example right here in the moment. So when this termination condition creates a full reversal, it creates an advantage, right? When you get that first bar and the triggers are strong, you may look for opportunities. But ultimately, we're right into a termination condition here. And then there's a 50-50. And what did that 50-50 look like? Remember, a great top is a wonderful asset, but it doesn't guarantee a win. You still want your rules met. And as it comes down and it creates this 50-50, you did have split triggers. If you took a shot at it, your stop had to go above the large triggers, kept you in. And the market did continue down right up until it gave a divergence. And this is one of those reasons that the favorable large triggers are so advantageous, guys. When you have split triggers like this, it may go up to that next area. Your stop has to be there. That's a lot of risk for a medium probability trade. Jim, thanks for asking that question. And look how price dances right at Fibonacci, guys. They know where these areas are. Ultimately, we get a second lower divergence. The smalls are heading below the large. The large are wide. They're angled in the direction of the trend. We are trading with trend. We're trading with momentum. We're trading with a clear path. And guys, you can identify an area inside of favorable large triggers in the event that you get a pullback. And that's how quickly your analysis can happen. And this is how fast the NASDAQ moves. And this blue line is not a termination condition. This blue line is a target, right? Price is down, momentum is strong. Area inside of favorable large triggers. There's one spot where this market is likely to continue if it's going to be a successful trend trade. Because if I go from the top of the triggers to the bottom of the triggers, there's only one line in there. There's only one area inside of those triggers. And it's a mid-band right there inside of favorable large triggers. We haven't reached a termination. Guys, give me a Y in the room if you see it. Your job is to study this, to take pictures of it. I would even go so far as that when you set that limit order, take a picture, right? Let me cancel that order because we made it right to fibs. But guys, take that picture. Open it up. Take that checklist that you got and ask yourself, Were my rules met? We know we had a termination that created a full reversal. That's the wrong color, isn't it? We know we have odds favorable momentum. We know that we have a clear path. And we know that there's an area inside of favorable large triggers. It's right there. And right there, Jerry. That was my area inside of favorable large triggers. No worries. But guys, do you see how I can say I have the advantages? And because I have the advantages, I'm going to take this trade. That's all it is. Your analysis will get to the point to where it takes seconds. But it takes you a while to get there. It takes repetition to get there. It takes trust to get there. Safia says, absolutely, I'm going to wait for that market to come back to me. It didn't, though. Safia, you and I have very different looking charts. No, it never came back. But isn't that a great pre-trade picture? Isn't that an awesome opportunity for you to police yourself, to say, do I have these rules met? Is everything in place the way it needs to be in place? Safia, how many days back are you on your charts? If you right-click and go to your data series, how many days to load do you have? How many days back are you? Yeah, John, we talked about it live. We had a limit order waiting. We talked about whether or not the rules were met. Same trade, guys. Everybody was looking for it. Now we didn't get it. And John says now it's over. How come? Because we reached 1-to-1s and absolutely no trigger lines broke through it. So now we're in a holding back. So Safia, I'm 5. Yeah, it sounded like sheep. 10 days back. Mark. I'm 5 back. That's probably the difference. So guys, termination condition. And now the smalls are breaking through with weak triggers. That's up to you. If my charts were your charts, I would change it just to be consistent. There's so much data on the NASDAQ. You don't need 10 days for great fibs. Jeremy, you're 10 days too? So now I have weak triggers, right? Now I have 3 divergences. All I can do now is sit on my hands and wait for advantages. Crude oil finally broke those areas, didn't they? Look at that fight between buyers and sellers until they got supremacy. And then they went and they just didn't get you in. Not a big deal to you, Jeremy? It's okay. So Safia, when he sent those charts out, it was a while back. And he said a couple times in the room, unfortunately, if you're not sitting here when he says it, you might miss it, that he swapped his to 5 days because there's so much tick data on that NASDAQ that 5 days creates great fibs. So he did a little research and went through. So no, it's okay. That's what I'm saying. It's one of those things where if you weren't in the room at the time, you might have missed it. Guys, look at that weak triggers. 1, 2, 3 divergences. And it blasts right past that mid band. Joel just didn't get us, did it? Sellers fought, buyers pushed, sellers fought, buyers pushed, sellers fought, buyers pushed, sellers fought, buyers said, boom, unload the guns. There wasn't an opportunity. When you go there and change the days, it's going to reload the chart, Safia. So when you right-click and go to your data series and change that 10 to a 5, it's going to readjust your chart. Same thing, you'll have to do every chart on the contract. John, she wants to be consistent with 5 days back with what she's seeing in the room. So she has a reason. And guys, that little bit of overrun on the 1-to-1s was identified with 3 divergences and weak triggers in the same location. And now we come up on one of those 50-50s, right? I think I'm 10 back on both of those, Joel. Guys, the patterns are the same no matter how many days back you are, right? Does everybody see it's a 50-50? It does for me, Shogun. Smalls are through with odds favorable momentum. Large theory. I don't even have an ES up. Show me a picture, Marco. Little bit of overrun, 3 divergences, strong triggers. I have divergence potential on the 5-1 on a 50-50. It's not 50-50 for long, right? Now it's a clear path with odds favorable. There's the top of my window. Let's take a pre-trade picture. And let's put our checklist up against it, guys. Is the market coming from a good top or bottom? It's not. That's a lot of overrun. That's not a strong bottom. But I do have strong triggers. I do have a clear path, and I do have an entry area. That's a pretty solid look that didn't get a pullback, right? Now I'm just kind of chasing. I'm waiting. I'm hoping. Give me a pullback. This is everything that I look for. Give me a pullback. From the top of the triggers to the bottom of the triggers, I can identify the area where the market is likely to continue, right? The areas inside of it. There's my window. If it pulls back to the top of the window, I'm in a trade. If it doesn't pull back, I'm not in a trade. Now I'm in a trade with the advantage of momentum, with the advantage of no termination conditions, and the advantage of having entered where the market is likely to continue. My stop is outside the window of opportunity. If I get a reversal bar, I'll move my stop. If I don't get a reversal bar, I'll assume that this is part of my 20 or 30%, and that's okay. Does everybody see how quickly that happens? You identify the advantages, you create your window of opportunity, and it either works or it doesn't, guys. But it creates a statistical advantage. It creates an opportunity. I'm not worried about wins and losses right now. What I want to see is this entry. I want to see that best of the best entry, that spot where the market is likely to continue. And then whatever happens next, it may go to the bottom. It may not. It may go up. It may continue down forever, guys. I'm not in control of that. The only thing I'm in control of is whether or not the rules are met. Whether or not I can take this checklist and say that I had these conditions met to get into the trade, right? That's the goal. We're just developing trust. There's your reversal bar. I jumped ship too soon, didn't I? And then John says, if 1-to-1s hold and the fib changes color with strong triggers, he calls it a good bottom. You don't know it at the bottom, you know it later. A little bit of overrun. Guys, if you took this the way you're supposed to take it, you now have a 56 stop, right? You were in at 61. And I believe you need to get to 66.25 for your first $100. The idea is being able to recognize entries, right? And guys, every market has its own characteristics. For me personally, I don't fight these small triggers on the NASDAQ, but it doesn't change the rules for entry. Give me a Y if you're with me on that, guys. That's how quickly you can gauge whether or not the advantages are present. Then Marco had a picture of the gap theory, right? Price from a bad top pulls all the way back to the mid band. And it closes the gap right back to the large triggers. And Marco says he took it and took exit right at the large triggers. And he knew he had a good shot because he uses a little higher time frame that had odds favorable momentum. Nice trade, Marco. In the beginning, guys, this isn't a trade. This is just an opportunity to not go short. Ultimately, it can become a trade. And yeah, you can't be greedy on this one. But you weren't. You used everything that you could. Areas likely to hold, terminations right at the mid-band. And you got out right at the large triggers. I think you handled that one beautifully. Nice job. And guys, look what the market did. It happens sometimes, doesn't it? Sophia, gotcha. Cost of doing business. Amen. Amen. Cost of doing business. I would take that trade every time. You couldn't keep me out of that trade. The only challenge that trade had, and it wasn't even a challenge, it was just not from a termination. You had every advantage, and they chose to not go in the direction. We're going to let them be wrong with dignity. Those guys made a mistake. Such a great entry, Sophia. Crude oil, right to the termination condition. Bad bottom, hits the mid-band, finishes the move to Fibonacci. Yeah, Sophia, you were spot on. Spot on. Guys, that's part of the trust factor. Is when you take the perfect trade and it doesn't work, go back and write your rules on the chart, right? Because if you take the perfect trade and it doesn't work, but you go back and you say, is the market coming from a good top or bottom? Do I have all of these advantages in place? Was this the right trade? Well, you know without a doubt that this trade wins more than it loses. And guys, it takes the burden of feeling like you're wrong right off of your shoulders, right? If your 10-day charts didn't crash Ninja, you'd have taken that trade too. So Jeremy, that's another one of the reasons why he went to 5. Less tick, less things to go wrong. Hey, David B. David B, we have S&P. I've got a termination that creates a full reversal. I have a full reversal that gives me odds favorable momentum, a 50-50 on the 1-to-1. Top of the window. Oh, got you by a tick. You stayed in it, got back in, and made money. David B, great recovery. What a great recovery. Yeah, if you spend too much time licking your wounds, you miss the next one. And John is saying that. David, great trade. Sometimes they don't work and you have to take it twice, right? This one didn't work. Then everything came down. And there's your trend trade short to get you down to that next area. Back when I was racing motorcycles, there was an expert class and a novice class. And guys, an expert told me one day, he said the difference between an expert and a novice has nothing to do with lap times, how fast you're moving that motorcycle. It has everything to do with how quickly you recover from a mistake or how quickly you recover from something going wrong. Guys, a trade not winning is just a trade not winning. That's it. It's done. Let it go. If you spend all this time wondering what went wrong, you miss the short with odds favorable, 50-50, strong triggers, inside, right? So focus on the best. If it doesn't work, it doesn't work. You're good. Gary, you need to repair database. Yeah, and that's true. On the NASDAQ, it's only a matter of minutes probably. And guys, straight to the termination. Termination creates a full reversal, but that full reversal is right back into support. And there's something wrong with my reversal bar markers. 2 trades since 9 a.m. John, so annoying. Marco, how much money did you make on those 2 trades? You made 600 on the last one. Maybe patience isn't such a bad thing. So you only made $1,000. It's 11:28 my time. That's not a bad morning. Gary, in order to repair database, the first thing you're going to have to do is disconnect. You're going to have to disconnect from your live market and shut that data down for a second. Once you do that, you're going to go Tools and Options, and you're going to go to Data. Guys, you can do this. If you're using 7, make sure that you're on Do Not Merge. Then you're going to hit Reset Database and Repair Database. And that's going to get you squared away. But remember, you have to disconnect first. John, check synthetic fibs, indicators, synthetic, reversal marker, show rule, false, transparent, 12-point, true, false, true. Yeah, it's a little off. John says it might be a mistake. It might be. I don't know how to tell. What's first time frame at the top? 13.2. Make it 34.5, not 5.1. Right here? Yep, reset, then hit OK. So instead of 13.2, I'm making it 34.5. It's just wrong. It won't let me adjust it. I'll do that after class. Yep, Gary, hit reset, hit OK. And then you should be good. Guys, for those of you that don't know, thanks, Daniel. I'm not a tech guy. Not even a little bit. Hey, look at that. There's my reversal bar marker. I'm human just like the rest of you. Hold your nose and breathe through your eyes. There we go. Got it fixed, guys. The community coming together. I'm waiting for my Skype to light up from John going, you big dummy, don't do that in front of class. I'm not a tech guy, guys. Check it out. A little bit of overrun, right? Divergence prints, large triggers get to the other side. That's a good looking bottom. Is it the termination that creates a full reversal? No, but with that divergence, with the triggers getting to the other side, guys, that's a good looking bottom. That's a bottom that can turn markets, right? You also had a loss of momentum and a higher divergence. And guys, this is why you don't change your charts because of Mark's charts. I'm 5, Jose. I'm 5. Guys, remember, I turn templates on, I turn templates off all day long. And if I get confused because I'm accustomed to reloading to get the indicators back on, I'm accustomed to hitting that 13.2 chart first and foremost because that's usually what it is. That messes everything up on the NASDAQ. That's exactly what I did, and that's why my reversal bar marker was not in the right place. There's a termination that pushes us all the way back to support. Support pushes us all the way back to resistance. Guys, look at this picture on crude oil. And then just for grins, let's go to the termination conditions section. I love it when this happens because, guys, this reminds you that the market, yep. Guys, the market repeats itself. Termination to support to weak triggers back to termination. Oh my goodness, it looks the same. There's that gap theory. Even though it's red, even though the smalls are below the large, look at that full bar back to it. And now we're coming back to resistance. And now we have, this is crude oil. If this is really going to be a top, we'll get a full reversal. We'll have a clear path. We'll get odds favorable momentum. Everything's going to work out exactly the way it's supposed to work out. The hardest thing to do is to do absolutely nothing, even though you want to be in a trade. I'm dying to be in a short trade, but my large triggers are still up. My synthetics are still up. I don't have areas inside. I don't have odds favorable momentum. My father-in-law used to say, wish in one hand, poop in the other. Tell me which one fills up first. Clear path, weak triggers. Clear path, weak triggers. Let's see what happens. Guys, what do you want to talk about? I feel like I've covered everything rattling around in my brain. So let's talk about what's rattling around in your brain. TK79, what do you want to talk about? K-Pops, M, Gary, G. What do you want to talk about? Samuel, show me some pictures. B, what can I do for you? Who else is in here? Shogun, this one's just for you. Bearish, bullish. All right, we covered it. Clank, what can I do for you? I'm looking at all my new names. What do you want to talk about? Dreams are the blueprints for reality versus wish in one hand versus the other. I don't know. Had to give props to Pops there. You can't, Shogun. How was that? You can't. There's no way to guarantee. But you want to know how you can give yourself a better chance of it being a win? Have the advantage. Why wouldn't you wait for perfect every time? Does perfect guarantee a win, Shogun? Let's cover that. Does perfect guarantee a win? Does perfect... Right on. So let's try this, Shogun. Let me show you how to have a statistical advantage every time you take a trade. Ready? You only have two options. Either your rules are met or they're not, right? They're either met or they're not. And then here's the second part. Do your rules provide a statistical advantage? So you want to know how to restart, Shogun? I'm glad you said that. Are you ready? Let's talk about the restart. So Shogun, my gift to you right now. Here's a set of rules at the top that have been proven to win more than they lose. It's mechanical, it's methodical, it's pragmatic. It provides the advantage of momentum, a clear path, in an entry where the market is likely to continue. All you have to do is be able to recognize those three components and put them together for an entry. Okay, so that takes a little bit of study, takes a little focus. So if you keep setting yourself to break even, right? So take those great entries, give yourself that statistical advantage, and then learn how to manage it. The path is there. And you know what John's asking, right? Which of these aren't you doing? Let's ask. You're not posting your trades in the class at all, ever, right? Why not? Guys, 99% of the time I can fix your challenges if you just show them to me. Shogun, if you need to practice them, absolutely. But why print them out? Why kill all those trees? Do you have a spreadsheet with pictures of a rules-based entry? Are you using the spreadsheet, Shogun? And I'm not trying to put you on the spot here. But do you fill this out every day? Do you go through and do you say, I followed the rules, I didn't follow the rules? If you don't have, when you say print out, like print pictures, just take a picture, Shogun. You don't have time to do it? How is it everyone else? How is it John Novak that's running a company and day trading and interjecting in the room has time to take 15 pictures of every trade, but you don't have time to take one? It's funny. I said I didn't have time to take pictures. I said I didn't have time to write rules. And I kept getting my ass kicked until I did. And take them after the day. So Shogun, keep it simple, right? The first trade is a high probability trend trade. It's the best of the best. It's the one that typically wins more than it loses, right? Let that be your first trade. Let your second trade be that 50-50 trade with no divergence coming from a good top or bottom. And keep it limited, right? So most people try to catch everything. Catch the best. That's how I tell people to resimplify. And you know what, Shogun? This plan came to be because a gentleman said the exact same thing that you did. He was trying to catch everything, and he was so busy he couldn't take, right? And then that's it. Wait. 90% of what we're doing is sitting on our hands and just waiting. So let's look at this. Shogun, let's go back and let's look at crude oil today. And Shogun, let's scroll back and look for odds favorable momentum and no termination conditions. Not a lot of opportunities. I'm looking. There's one of those 50-50s. That one might be on the list, right? If you scroll back a little bit, there's a small tail there. We'll see what that looked like. There's odds favorable, everything going up. So I'm going back, and right now, Shogun, what I'm doing is I'm looking for strong triggers and I'm looking for tails. And we're going to see what these look like on the smaller, faster chart. And I'm making sure that they're not in termination conditions. Crude's had a lot of action today. But you had to be patient. Do you see how long you have to wait in between circles sometimes? How long you have to wait for that statistical advantage? Remember you went through the sheet, real life market, in one webinar. I just can't find the review. That was a beautiful bottom. And actually, this was probably a 50-50 shot at it. So go back and see what opportunities fit the rule, right? Yeah. No matter what your opinion was, the only direction you should have been looking was up. And then go to your 5-1 chart, and let's just look without, we won't even put the two together. Let's see what the circles look like. And we had to wait a while, didn't we? Look at all this nonsense that you can stay out of. But look at that. What do you think, Shogun? Pull back to support inside of favorable large triggers? So there was an opportunity at 957 to get in the market at 46. And it goes up to 70, which means that's a $300 trade on that mechanical, methodical, everything lines up trade. So you're up $300. This one didn't make the areas, nothing to do. This one is perfect. You're up another $300. So $600 in 3 potentials. That one didn't make the area, probably didn't get in. This one fought divergences, probably didn't get in. So Shogun, 2 opportunities in crude oil today. If you took them both, you met your goal. If you clouded up those perfect trades with not perfect trades, well, then you probably gave most of that goal back. Does that make sense? One of our best conversations that I think you and I have, Shogun, is beginning to omit the noise, right? Focus on 3 rules: strong triggers, no termination conditions, and then work those entries. Try to keep your brain from saying things like, is it bearish? Is it bullish? Is there the Noriyuchi channel? Is there a color? Is there a different feeling? Is my left palm sweating? Right? Shogun, we're waiters. We're not traders. We're waiters. We're waiting for the opportunity. And if you wait, if you're patient, then you're going to do great things. Is it trend or consolidation? Who cares? Shogun, consolidation. Is it a pivot confirmed with the midband? Who gives a shit? Pardon my French. I'm sorry. Who cares? Is it strong triggers with the advantage of momentum? Is it a clear path because there's no terminations? Is it an area inside a favorable large trigger? Shogun, that's it. It doesn't mention consolidation. It doesn't mention anything other than 3 advantages, giving you the absolute best of the best trade. Your job is to be able to identify it, to annotate your charts, to simulate the trades, and then post that picture in the room and let me see what you're doing. Guys, people ask me questions all day long, but Mark, what about this? What about this? And they never show me pictures. I had a gentleman that did that for 6 months and he was frustrated and he wanted to quit. And I told him, I said, just show me some damn pictures in class. And we fixed 3 or 4 of his problems within a day, guys. 3 or 4 misunderstandings were cleared up within that 3-hour time frame because he showed me what he was doing. We could identify it. I don't notice any of that. Shogun, the only thing that I notice is odds favorable momentum, a clear path, and an entry area. That's it. That's it. It's crazy, isn't it? I can't go long and I can't go short. Shogun, nothing else matters. I don't have odds favorable momentum. Rule number 1's not met. Nothing else matters. I don't have a clear path. Nothing else matters. I don't care about the mid-band. I don't care about these 1-to-1s up here. I'm not concerned with resistance up here, support down here. In the moment, I don't have odds favorable momentum or a clear path. So man, I'm just going to sit on my hands. It's almost liberating when you let it be that easy. It really is. Takes all the pressure off of me. John Novak's created an amazing plan. This is the best software in the world. Let it do it. Leave the other stuff out. And you won't gain skills unless you're doing the correct practice with the correct trades under the correct circumstances. Sharing every trade you take sucks online. Makes you feel ignorant sometimes. But screw everyone else's feelings about you. You need to become a winner, so post them all, absorb the feedback. Guys, I didn't post trades in John Novak's class for 3 months because I was scared to death that you guys would realize that my last name was Novak, and I absolutely sucked because I was brand new and I hadn't done the study. When I finally embraced the spreadsheet, when I finally embraced posting in class, and when I kind of put my big boy britches on and I took the feedback, guys, my trading changed dynamically, so much so that I started teaching a 101 class. So we can get you there, I promise. All you have to do is post in class. Study, practice, write your rules. And Jeremy, that is one of the greatest things you can do for yourself. Don't practice the wrong rules. And some of us definitely have harder heads than other guys. The mid-band gave a bounce. Last 8 times it touched it. All of them since 1025. Marco? Sure did. That market's trending up, isn't it? And then it did it there. And it did it there. So it's not necessarily the mid-band, right? It's the idea of whether or not. What did the triggers say? Came back to it, full bar away, came back to it, full bar away. Little consolidation, and then it ran, right? Tap, tap, tap. What did it say down here? Mid-band was right at support. Mid-band, full bar away. So there's a little more than it just being a mid-band, right? There were conditions going on that created that trends rule. And guys, what happens is you're going to get bored, right? And you're going to break your rules. Shogun, the triggers lead everything. You want to see how much information there is with just trigger lines? Watch this. Whoops. Let me go back to the beginning. Strong triggers, market continues up. As they work inside, you might be losing momentum. Loss of momentum pulls back. Flat triggers, they're lifeless. The market goes sideways. Everything says up, the market continues up. Strong triggers, the market continues up. Lifeless, weak triggers, consolidation, right? Triggers are everything. Momentum is everything. So why not get good at this, right? Why not get great at trigger lines and look at the reaction? Weak triggers, there's your pullback. And you're going to get so good at pattern Shogun. Watch this. Guys, dollars to donuts, there's a mid-band or Fibonacci support here because look at the gap back to the large triggers, how it closed it, right? So let's see. Let's see if using trigger lines can make us so freaking smart that we can define areas without them even being there. Holy smokes, there's a mid-band with a gap theory. Isn't that cool how that works? Triggers tell you everything that you need to know to get into a trade. Triggers will tell you everything you need to know for when it's time to get out of that trade. So guys, learn your triggers first. Trust your triggers. When your triggers don't agree, there's nothing to do. When your triggers are flat, there's no momentum. Look at all this consolidation, all this nonsense that it had to work out until everything went strong again and pushed you in the direction of the trend. But we all try to fight it, don't we? We try to fight. We want to be smarter than the system. We want to be smarter than the plan. If John Novak is smart, I can be smarter. And Ron, I'm with you. Too many charts makes my head catch on fire. 2 charts, 1 trade, practice, practice, practice until it's easy. So I'm going to end with this because I want you guys to embrace this. Post your trades in class, guys. Post your trades in class. Everything that you do, every question that you have, get it to me. My job is to give you feedback every day, and I can't do that if you don't allow me to. Use that spreadsheet. Shogun, this is for you. Take 1,000,000 pictures. You don't have to annotate them at all. Go back at the end of the day and annotate them. Everything that you see. And then Shogun, here's the kicker. Bring them back to me tomorrow. Bring them back to me tomorrow. And let's talk about the way you're reading your indicators. But when you do it, Shogun, I want you to do me a favor. I want you to keep the language simple. I want you to identify momentum, termination conditions, and potential entries. And I want you to leave the rest of the nonsense off because we're going to train your brain to keep it simple. Every morning for an hour, we're going to talk about the rules, guys. Every morning, we're going to reinforce these great lessons, the advantages that they provide. Every day, you're going to simulate your trades and present them in class. And you're going to practice the correct trades. You will break rules. We'll work through that together. But you're focused on practicing the best of the best. Simplify. 3 rules, 2 charts, right? 3 rules can really be defined in 3 words. Momentum, clear path, entry area. You either have it or you don't. That's your only option. Do a little market replay. Practice some more. Shogun, this will be the 3rd time that I've given you this. 3rd time today in the last hour. High probability trend trade. That's your first trade. That's your best of the best. The second trade is that 50-50 trade, that medium probability trade. I've given you a checklist with the conditions that must be met for both. This is your start. This is simplicity. But I have a feeling this is going to be the one that pays dividends for you. Don't fight direction. Don't fight triggers, ever. No, you're okay. My brain dreams a lot, so I totally get that. But there's your plan again. So Shogun, this is what I want you to do. I want you to print this out, okay? I don't want you to read it. Well, I mean, you have to read it. But I want you to go find 10 pictures where short entries rules are met, okay? And I want you to go find 10 pictures, that's all, of where long rules were met. And I want you to put those pictures into your spreadsheet under your favorite looks. And I either want you to email them to me. I want you to say, Mark, here's my 10 entries for longs, or not even that many, because that's a lot. Here is 5 entries for longs, 5 entries for short. Email it to me, right? Bring it to the classroom. Let's talk about it. Let's make sure that the understanding is there. If we need to fix anything, we'll fix it. And we'll focus on simplicity. We'll do it together. We'll get you exactly where you want to be. You're going to do your part by sharing with me. I'm going to do my part by giving you amazing feedback 15 hours every week. And we're going to high five on your private island one day, drinking pina coladas. That's our plan. What do you think? John says gap theory. Everything rolls. Price closes the gap right there at 1-to-1's triggers. Takes a quick entry. Notice that he is fighting a termination condition. Notice that he is fighting triggers. He will take 1 shot in case this was overrun. You can do that when you're up 10 grand on the day, guys. You can fudge your rules a little bit. But you don't get to be an up 10 grand a day by hope and wish and pray, and you do it by following rules, right? And following rules teaches you to read charts, and teaching you to read charts creates expectations on patterns. Safia says, I'm waiting on the gap theory. John Novak, you take it. I'll live vicariously through you, but I'm going to wait for bigger advantages. That's hard to do sometimes, isn't it? Guys, you watch other people trading, and you forget that you have to be the trader. You have to be your own trader. Your rules have to be your rules. Your entries have to be your entries. Your exits have to be your exits, right? Don't worry about what John Novak's doing. He shows you pictures, and I'm going to get him for putting this one that doesn't fit the rules in the room. But he shows you pictures all day long of high probability trend trades to remind you guys that you can do it with simplicity. And when you focus on simplicity, you're going to learn to read your charts. And when you learn to read your charts, you're going to be able to do amazing things with this software, guys. But it starts from the beginning. It starts from step 1. And I'm going to be with you every step of the way. And with that, that's the end of my day, guys. It's been a great day. Great lessons today. I hope you traded well. I hope you made some money. I'm going to be back tomorrow. We're going to do this again from 9 a.m. to noon. And we're going to do this every day. If you're brand new and you're sitting on the sidelines, get in the game. Get in the game. Sorry, Gary. Gap theory, 100%, right, Gary? Anything that happens between the bottom of this bar and those large triggers is likely to get run over, and it did. Ignore the obvious pivot from space to the mid-band. Your trade was okay, Gary. Your management stunk with the divergence. Guys, gap theory. There's just no reason. You can if you want. I hope I'm the first one, but gap theory is a thing because it happens all the time. All the time. All right, guys, have an amazing afternoon. Guys, there it goes again. That mid-band is still a termination condition, isn't it? And look what's happening. John Novak's short was short-lived, but he knew where the trouble was going to be. Guys, have an awesome afternoon. Thank you for being here. Thank you for participation. I will be back tomorrow morning at 9 a.m. We're going to do it again. Same thing every day, guys, until you're so sick